explain something, if you don't understand it and you go home that I don't understand it, then you're going to have to dig it out yourself. The purpose of me and the community here for the people is to ask questions, ask the tough questions. Maybe I don't have the answer to all of them, right? It just depends how you trade and what time frame you're on and what you're looking to get out of the market, right? We might have a different, if you want to call it, perception of value and what we're after. I mainly day trade using market profile. Market profile is intended for day trading. It does build a picture of other time frame participants and balance and imbalance. And the objective out of this class for majority of you is to understand what is market profile, how can you use it. It's not an indicator. Sheet, go on mute if you're going to be unmuted. Okay. The goal is for you guys to understand that this is time and price. The real relationship, just like we did volume profile, it's the volume and the price. When we get to a level of accumulation or HVNs, how do they respond? The market profile does the different combination. If you guys recall, it was price, time, and price, time, and volume equal value. Now we're kind of focused on the 2-dimension, on time and price. How much time are you spending at a price is important, right? Just like when you guys go shopping somewhere, if something drops significantly low or something drops significantly higher, you're going to have different participants come to those extremes, and the price might not be spending a lot of time there. You can definitely figure that out by looking at the candles, but what market profile brings is really a graphical representation of how to decipher the market. And I would say out of your trading strategies, this is probably the most boring one. A lot of you guys that are coming in, I would say from lagging indicators like the oscillators, whether it's RSI, MACDs, or whatnot, this might be too much work for you. But market is a lot of work. Market produces a lot of information, right? Sometimes live, and sometimes what you have planned gets confirmed during the day, and sometimes what you planned, on a pivotal level, it gets rejected and it goes to your other plan. So determining those biases of this is the zone or level where we're looking for acceptance or rejection, and if you're accepted above, you're really looking for price to do discovery up or down. That's what market profile brings, right? Don't confuse this necessarily with an indicator. It's really not an indicator. It doesn't tell you buy or sell. It just gives you the information and context for you guys to make decisions. And there's some good information that it produces. That's what we're going to go over. We're going to cover the setups that we produce out of this. And then, of course, just like volume profile, the opening and acceptance and rejections of values and balances. And then, what does it mean to be in a trend day? What does it mean to be a bracketed market? A lot of you guys asked. And then finally, what we're going to do is go through the PowerPoint, prepare for Monday coming up, and kind of mark the levels and what are the key levels that we're watching for. And once you're able to establish this, you really have to switch. Your total mindset needs to be shifted from, can I buy here or sell here? The question you should be asking yourselves, where's market trying to go? And is it being accepted or rejected? And then finally, is it doing a good job of, facilitating trade there? Once you have those questions kind of embedded in your head and you start thinking in those terms, I think trading becomes a little bit easier and easier, at least on the market generated information the market profile produces for you as a trader to make a decision. Okay. So with that being said, this is the agenda. I would say, if you're not familiar with the market auction, the first couple of slides we're going to go into that. Just like any auction, market is a two-way auction process, right? You have the people that are willing to buy something, people that are willing to sell something. When people say, oh man, this is a demand zone, there's a lot more buyers here than sellers, most of those people will never succeed in trading the markets. My pet peeve is when people say that there's more sellers or buyers. It's really, there's no more. It's an auction. For every buyer, there's a seller. For every seller, there's a buyer. The locals in between, right? They help facilitate the liquidity, and sometimes, you know, they become net long or net short, and that can play a role of unwinding of how the market plays out. But you would be aware of that in most cases when that happens. So your job as a trader is really to find the repeatable setups that happen and understanding if that level that you're buying is advantageous. Is it, you know, two-sided activity occurring? Are people happy trading here or not? And then avoiding the trades. A lot of you guys have, somebody messaged me on Friday that they had 156 trades on a Friday. To me, that's just fucking ludicrous. I mean, if you go back to your charts on Friday, I cannot find 156 setups. There was not 156 opportunities to take that, guys. And what typically happens there is when you take so many trades, I'm not sure who's your, you know, broker, but commissions will eat you alive when you take 156 trades. Second of all, it tells me that you're the liquidity. You're just being played by the market up and down. You're selling where you shouldn't. You're buying where you shouldn't. And then it's basically oscillating match between you and the market. The market's winning most of the time, especially when you have, you know, a bad start. When you have a couple of losing trades, you tend to fight the auction and go against it. Objective of the market auction is really to meet the best bid with the lowest ask, right? So if you have the highest bid and the lowest ask, what do you get? Well, you get a transaction, and then transaction of how it's executed plays a role whether one side is more aggressive or less aggressive, right? Question for you guys, at least maybe the one that are, would the price be indicating acceptance or rejection in balanced or trend days? Is the price showing acceptance in trend days or balance days? Which one would be?
Balance days.
Yeah, so that's correct. And then when you have a balance day, whether it's a D shape, a normal day, or a neutral day, sometimes you can have, you know, on the day types, we'll get there. But when you have a normal day, that means there's a two-way auction, and basically people are accepting that price and trading. Match the highest bids with the lowest offers, and you get transactions. Market does shift between balance and imbalance, and key point is if the price is, again, accepted or rejected at those new levels where price discovery occurred. Once we go to the live chart, right, for TradingView, we'll go over this and kind of help you guys visualize what does that mean in terms of day-to-day profiles, and then what does it mean, let's say, on composite profiles if you merge some or look at the weekly, monthlies, and how does that auction perception shift, right? A good example of a market auction happens pretty much in any product that you guys are associated with. I would say everybody on this call probably has a car. And if, let's say, I would say, yeah, probably a car is the other, everybody has it. Right? I'm trying to find an item that everyone has. So if you have a car, and let's say all of our cars died, or let's say 50% of our people on this call, the car died recently, and the other 50% is just thinking about buying a car. The people that must buy a car, right? That's a need, a necessity. Do you think they'll get the fairest price?
No.
Oh, because there's a high chance you're gonna go to the dealership, and the dealer, the funniest question that they ask, and I don't know if you guys know about me, but I'm kind of weird when it comes when I have free time on Saturdays. I like to go and fuck around with dealers and dealerships. Just if I'm looking for the car, I'm not in the need of a car, but wife would like a car, so I go and I throw numbers, then gets me kicked out of most dealerships. So, and just like, let's say a person that needs a car, he goes there, they're going to ask you, how much are you willing to spend? As soon as you give them a number, it means that you're screwed. You gave them the ceiling, and they're going to go over that because they're going to tell you that there's more value in this car, right? So when you're buying, when you're in a desire need of a car in the market, well, they're going to try and feel that out while you're shopping, and they're going to push that price as high as they can. So for them as a seller, they're going to go to that extreme and see if they can increase their margin by selling it to you that's a need. But then you have a guy like Shorty comes in, and I'm like, okay, well, I'm looking at this car. I see it's valued at $100,000. I don't really need it. Like, you don't tell him straight up, but I can offer you $60,000 cash, like right now. Not that cash matters nowadays, but it's just one of those corny things to say. So for me, what are the odds that the highest bid and the lowest ask is going to match? If they're asking prices, let's say 95K, well, the odds are that the rest of you will come in and buy the price based on the value perceived by you and the circumstance and context that you're in. Just like a profile on the stock market, the circumstances of other time frame participants and the locals and the short-term traders is different. As if you guys come into a dealership, each one of you is going to have a different perception. If you get a, let's say, one of you is really wealthy family and your dad's like, oh, just go buy a car of your choice. Do you think that child's going to care if he pays 95 or 65 at that dealership?
Nope.
No, he's going to say, I want that car and I want it to have, this leather and this speaker and whatever the, the highest end features the car can have. And therefore he's going to pay the premium for it. But if you get, for instance, a family that's conservative and they haven't bought a car since 2000, let's say 10, after the collapse, I think they're going to be really, keen on getting the most for their dollar, right? Whether it's rebates, whether it's free stuff in the car or whatever that might be service-wise, they're going to try to kind of auction back between the dealer and them on the features versus price. And eventually, if they meet, they get a transaction and buy a car. Stock market does the same thing, guys. We'll go into the live and I explain what happened since last week and kind of give you this whole spiel of market auction theory. But in a nutshell, if you don't have those buyers willing to drop the price, or if you're not having buyers willing to offer more, would you have a market auction?
No.
No. I mean, just think about it. If it was all other time frame participants coming into a dealership, who would buy or sell a car ever? Probably would not happen, guys. When you have other time frame participants meet, they don't transact that easily. And it's really rare that you see other time frame seller selling to another time frame buyer at a level. That usually causes chaos. Maybe there was some recently with Japan stuff, but it's really, really rare to see. So when you think about market behavior, right, we typically have something called balanced markets. If you guys had to guess, what percentage do you think the market spends in balance?
80.
70.
5.
Yeah, 70 to 80% markets in this type of action, right? And when I say bracketed market, that means balanced markets. Bracketed markets typically last more than, typically when I say bracketed means 2+ days or 1+ if you're really, really short term. But 2+ days, if you have it in a bracket and you have the highs and lows, that gives you a different type of context and what's happening in the market, right? If the market is in balance, what does that tell you about that price and what are they trying to do?
They like trading there.
Yeah, that would mean that they're happy buying in this zone. They're happy and they're smiling. It's like, man, I got a good deal. So now let me add a twist to it, right? When you're in a balanced market, let's say, like we are here, and when the price dips below, what do you expect to happen?
Bounce.
Responsive buyers.
Other time frame buyers.
Yeah, but you would expect responsive buyers to come in and defend this, right? Unless there's a different market news or something stepped in, like we have upcoming week, I believe we have CPI, right? Like I think that news can really throw off the balances, right? A market awaits information as well. When market is awaiting information, this is the type of price action you get. And when the price dips there, the first instinct and what happens is the expected activity is your responsive buying. People like to buy below value, just like you guys on the call. If you're in a bracketed market and the price, let's say, peaks above like this, the expected activity is what?
Sell.
People are
Selling.
expected to sell. If majority of the price action occurred here and price is being rejected in this area and this area, well, most of the time they're going to come in and start selling here. Because as a seller, just back to the dealer, example, if I can sell that Yukon to Shorty for $160,000 because his wife is screaming that she wants it, there's high odds that they're going to sell it to me at that price. And I'll be initiating and buying at top of the market for that Yukon. And let's say you buy that car on a loan, now you're screwed because the real value of that is where the volume happened or time spent for that product. And in this case, the time spent here, we use 68% of the time on the value area is here. Any anomalies up top and here are not being accepted. So when you look at the context of a chart, let's say this was 5 days. On a 6th day, we peak above and we close here. Well, that day becomes super important. Why would that be important? On this day here that we are closing above the value that was established. What could that mean to you?
We're accepting it in the short term. And we're looking to see if they end up actually accepting it or rejecting.
Okay, so here's a follow-up question. We're not there yet. Most of you should be aware to answer this. Let's say we open above the close on Monday. What would you watch to make sure that we are not crossing? What is the pivotal level for everyone?
The high of that balance.
You're talking about here, right, of the prior balance. That high becomes important because if you go above, and let's say in the A period you start selling off, then the B period comes in, and let's say it can't crack, let's say 50% of that A period, what would that indicate to you?
Rejection.
That most likely would indicate rejection, and that means the other time frame participants found the selling opportunity to be advantageous, and they're saying, here's your Yukon at 160K, we fall back inside. And the rule of balance and trending markets, balanced and bracketed markets is what? If you're rejecting one side, where are the buyers going to be expected?
At the bottom.
At the bottom, right? And in between, you will have the POCs, which can be served as a target one. But ultimately, you're looking to go all the way to the bottom because that's where the activity is. What's not expected here is initiation of buying. When you go above value, initiation of buying is not expected. What you want to see is you want to see the price go up. And then when you come back, just like this example here, this becomes a very good long on the first step. First try, this becomes a very good long, right? And when that happens, you're looking for acceptance. If the price is accepted, this becomes a really, really good setup. And most likely you're going to crack those change of characters or break of structures, depending on where we are, we're going to go higher. If they fail, like we did, if you guys look at June value area, right, on the highs and lows, my first reaction was, well, they went below it, they reclaimed it, then they got rejected. Think about what I just said. You went there, you went below it on the first try, then you went above, and then the next day you went below it. Well, for me, it's telling me the other time frame participants there have no value of buying there. They're looking for value to be cheaper. And then they found it at what, 51.50 or so, which was a level that I would say I was aware of it, right? Where we can potentially bounce, and that's where they found buying. And we'll look into that. So in terms of participation, hopefully you guys are connecting the dots. When you have value, selling above is responsive. Buying above is initiating, meaning you're looking to, and this is not expected here. You don't expect people to start buying above the value. When you're starting to buy in above value, there's one critical thing you have to pay attention. And what is that?
Acceptance of value.
That's true, but what confirms acceptance?
Volume.
Volume. So when
And
you
the
see
retest.
us, when you see us come in above a level and you see a lot of buying, and let's say we're not cracking that high or balance prior high, that's a good indication that these boys are ready, or whoever, to take this price higher. So volume becomes really, really, important gauge of directional acceptance. If they're defending this level and there's a lot of volume, that means they're buying on that retest and they're looking to go higher. As we are approaching that, and you see no volume increase, well, and they're dipping through it, what does that tell you about this level then?
Rejecting.
They're not really interested in that value area high. That means you're most likely going to fall back in the balance and most likely test the opposite. So is there anyone that's not following the 4 types of behavior about value? This is really important for you guys to understand and think about every freaking day you trade. Any new people?
When I started understanding this, my trading became a lot easier.
I would say this is a very, very important concept for you guys to understand.
Definitely.
We're looking at it at prior day, prior week, prior month, or even developing.
Even developing, right? So I will just switch for a second from here into the into a chart. Let me give you this. So since you asked, here goes. Okay, so now if you look here, for instance, let me go 8 hours.
Perfect example right now where we're at. Yes.
Okay, so yeah. All right, so let's take a look at this. This was our prior breakout level, right? So if you look here, I'm just gonna increase this tick size a little bit. Let's put 10 so you can see it clearly. I'm gonna remove any markings and let's take a look at this, right? So I'm gonna work with you guys to identify where was the balance, where is the imbalance, okay? So would you guys say, let's start from here, okay? Don't worry about the rest. Where's the balance here? Balance is when you have overlapping values or ranges, right? So I would say that overlapping balance was most likely, I would say, somewhere here. What you can do, and what I like to do a lot, is I like to use kind of like merging feature of the profiles, because in combines, and I use FVP, you guys will see me do this a lot, where I draw it and I'm like, okay, well, this is the value area high of this balance, right? And this is the value area low, and this is the range high. In this case, it would have been like 214, but that seemed to be a sell-off, and then all the way to the bottom. So if this is the balance, then this was the kind of imbalanced profile, which caused what again?
The breakout, and then they retested.
And then you had a balance that was formed here. So if I was to go here, and let's say I merge these profiles here, and this takes usually a second. So let's say, okay, so here's our profile that was basically, I would say, for May and June a little bit, and this was the breakout level. So we went up from this area, we auctioned, right? We opened right at the value area high, kind of similar to what I was just explaining on that PowerPoint. I didn't mean this example here, but you see where we are opening, right? And then they dipped inside of this value, and as soon as they went above, they said, well, we're going to explore higher. Then they had the gap. I think there was some news here, but they proceeded to go higher, right? They're looking for prices higher, and you're looking to see what type of profiles are they creating, right? So if you look here, what do you have again here? I would say, what type of profile is it printing here? Is this a bullish, bearish profile?
Balanced D-shape.
So this is a clear balance profile. And the value is fairly tight, right? I would say the value is narrower than typical profile on a couple of weeks. 27 points for lately. This is a piece of cake, right? We're averaging 60 points now. When you have something like this, is it easier to explore higher or not when you have a narrow profile or value area?
It's easier.
It's much easier, right? And then when you zoom in a little bit here, how much price facilitation did they have below the value? Like right here, did they spend a lot of time here?
No.
No.
No, they didn't spend a lot of time here, right? And then the following week, they shifted actually the value area low, but what happened to the value area high? It's basically an engulfing of value, right? They're saying that there's more participation here, and different time frame players are stepping in right here. So you basically doubled the value area compared to the prior. And on this profile, whatever it's worth, I'm just going to notate this, and you guys will pick this up shortly, that there was a poor high. Okay. Don't worry about making sure it is. I'm just giving you a significance. If this is a poor high and this was our breakout level, well, let's take a look at it where we are kind of now, right? When you go in the current profiles, right? If this was the level that we needed to hold, what happened at the top? We explored higher, right? You accumulated a lot of time at the top, right? So you had a major accumulation. We call these distributions, right? From this distribution, you auctioned where?
Lower.
So you opened high, and then eventually you rejected this and closed, and you closed this week where? This was, remember that balance profile I just drew? This was a point in value at one point. You closed here, and then what happened the following? Well, they're like, okay, well, we're gonna kind of open here. We're gonna open out of this. What does that tell you about this value that was formed prior to the breakout?
Rejecting again.
So we're rejecting, obviously, to the upside, right? And then when you look at, let's say I merge this one with prior profile here, let's take a look at this value now that was formed at the top. Okay, if this is the value that was formed at the top, and we rejected the narrow value, and I would say this is a pretty big change in terms of two values, 179 points roughly, and this one's about, what do we say, 27-ish. So which one tells you, what is this one telling you versus this one?
Happier to trade higher.
Okay, we are accepting prices here, but what about participation? When you have higher values and wider balances,
There's more.
There's more.
there's other time frame players setting up here. Okay. And obviously, we opened here and we closed on the bottom of the week. Then they came back, and what did they do here? What did they attempt to do? Where were they trying to go?
They wanted to go back into that previous balance.
They wanted to go back into this balance, and which was very close to the POC, right? They came inside and they got rejected, right? And then they, of course, you guys know what happened afterwards. We sliced through this area, right? We sliced through this gap here, and then we went back inside where? The initial balance where we caused the spike from. So these are the values on different time frames that we were talking about. It could be developing, right? It could be day profile value. But when you think about it, this is still what? Does this not apply to every single one of these?
It does.
Yes.
You can find in every one of these, you can find that, right? So now when you think about it, right? When these guys, when the price dropped here, what happened?
Bought it up.
Well, let's think about it in terms of this. Where were we? When the price broke from here, right? Price broke from this
We were
level right
accepting the
here,
value, the previous balance.
and then they came in here and they printed pretty massive, I would say, single prints on A period here. It went all the way to 51.89 from like 40s. What did they tell you here?
We don't want to auction there.
Yeah, we don't want to auction there, and then the volume, if you go back on, even if you go on daily, look at the daily auction here that came in on the Monday, August 5th. It was actually one of the highest volumes we had. They came back and they said, well, we like it here. We'd like to buy it here. Now their goal is what? This is pretty important because this is happening this week. What is their goal now?
To break
To
the top.
defend.
Yeah.
Well, their goal right now is they want to crack this high that was set here prior, right? Which was, I think it was like 85, what I had, maybe 86, sure. It was 86.25. Let's say tomorrow they crack about this level and they fail. What does that tell you about the participation? Who would you expect to show up tomorrow?
Responsive sellers.
That is the expected behavior. But considering, long weekend, what they could do is gap, and then that would be the level we watch for pivotal that they can't break below. Because if they go above this tomorrow, let's say they go here, and you guys remember this August 2nd, Friday, this was the profile that broke this balance. If they come here, well, the next level would be that they ultimately need to reclaim, what is this, 5431? Why would this be important?
To get back into the previous
Reclaiming higher value.
Yeah, this was the, when you think about this whole range, you'll have balances depending on what time frame you're on. I'm on daily, right? So if this is the balance that we are on prior, they're going to try to get back inside here. Can you have values overlapping? Of course, yeah, that's the beauty of it. If you're in an uptrend and you're seeing a lot of overlapping values, that's not a very strong uptrend. It's a dying uptrend. If you're going down and you're seeing a lot of values overlapping, what does it say about the downtrend?
They're not confident in it.
They're not confident in it. Okay. So now, does everybody understand this at least a little bit better than, let's say, before you joined it? This is very important slide, guys. This is super, super important.
It makes more sense now than it did before, for sure.
Okay. Is there anyone that doesn't understand this?
Could you clarify something you said on the last when you're showing the charts with all the balances? I had a question.
Sure. Let me go back if I can.
So you said at that bottom balance, the other time frame buyers.
Just to make sure I'm following this one that I
For the
just
car.
marked.
Yeah.
Okay.
So
Yeah.
they went in there, and then other time frame buyers are like, "No, we want to go higher."
Mhm.
And then you said they want to break that level at 5386.
Mhm.
Is that just because they just want the price to go as high as it can?
So if you're buying low here, right? You're buying below value, you're gonna try to look to sell where?
As high as you can.
As high as you can. And if the prior value was extreme high was, let's say, what is this, 5386? If you can go above this, what would you expect these guys to do?
Sell it.
You would expect to sell it. If these guys, let's say they are extreme other time frame buyers, I'm saying multi-year, would they want to sell here?
No.
No, right? So tomorrow we get to find out these guys that bought it here, were they buying for this or were they buying that, we're going here?
Oh, that makes a lot of sense. Thank you.
Other time frame participants come in different time frames. If it's a week to week, that's another time frame participant. I'm buying this week, I'm selling next week. Maybe the market became too short when we were selling here. There was a lot of volume here on uptick. How much volume are we seeing on buying here?
Not much.
So if you're not buying a lot after the stopping candle, well, you better show up tomorrow. Like tomorrow is a big day. And this balance that was set prior is going to be playing a crucial role. And on your class, like when you're marking levels for tomorrow, what do you guys think will be the most important level I'm watching tomorrow?
3150.
Which one?
Or 3150 or 386.
86.
8625 is going to be the most important level. And this is not a new level for anyone on this Discord. We talked about this level, I would say, for about 4 or 5 weeks more, right? Tomorrow, this is a pivotal level. If they're able to get inside the 5431, that opens up the doors, right? That opens up the doors to about 5520. Because that means that you're accepting this value, and when you get inside the value, the rule is that you're most likely going to test the opposite extreme, which happens to be what? On volume profile. What does that indicate? So if you're going through a low volume node indicates what? And that's right here.
It's gonna fly fast.
if they can get price acceptance above this level, there's a high chance that, you know, they were not really sure that they wanted to facilitate trade here. Most likely we can auction there really, really fast. And at this level, this would be a pivotal for all-time high. Let's think about it, right? I'm just gonna delete everything and we can redraw it. If this was the range that we were trying to hold prior, let's say right here, this was the top distribution here. And now this is the bottom distribution. So doesn't that make this whole profile kind of like a double distribution? Where you have a top and then you have this massive bottom distribution that's sitting right here. I'm just grabbing off a volume here. So if they're able to do that, they're targeting to start trading and facilitate trade in the top distribution. Okay, here they need initiative buying to occur, and then here, what would you expect to see here at this level?
Rejection.
Oh, rejection.
Yeah, you would like, anticipate to see some selling, right? Or if they dip inside of this, you know, you want to pay attention to this volume node that's sitting here, because this is the highest point in this case where they traded, right? 52.31. And I think that was our, if I'm not mistaken, that was our like 3 months or 2 months POC at one point. Yeah. So that would be a big, big level, right? And typically on volume profiles, market profiles, the extremes, you know, of failures, and you're always targeting POC first and value area second, the extreme low. Okay. Okay. Does that cover this slide pretty okay?
Yes.
Okay. All right, let me go here. On bracketed markets, and don't confuse the new verbiage. We can call it whatever you want. I call them brackets. And when you think about brackets, you know, just in your life, what do you think about? You know, you have a ceiling and a floor, right? In a bracket. And when you think about, if I was to put brackets here, it's here and here. You're in between the two brackets. Whatever you type in stays in between. And it's almost like a stock market. You have the top bracket and you have the bottom right bracket, and we're a two-sided activity in between. Not in a trending market, but I should have typed that up here. That's in a bracketed market. Means balanced markets indicate what?
Price acceptance.
Fair
They're
price.
indicating fair price, and people are willing to trade in this, right? A lot of times, who likes to trade in bracketed markets?
Short term.
Well,
Retail.
short-term. Retail, yeah. What about locals? Do they not like?
They love it.
It's their highest transactions, right? I mean, the
Floor
most volume
traders.
happens. Floor traders love it. That's why floor traders are important during the IB, right? When your initial balance is set, those guys are like hawks. And you know, there's something called opening call on the floor. I don't know if you guys ever like heard of it. On the floor, typically, you will know if you're on the floor, you would actually know when something is about to happen because you're gonna hear somebody scream a large order. And when that person screams a very large order, what do you think the rest of the guys are doing?
Follow suit.
They're like, oh god, that guy from JPM just bought 1,000 contract on ES.
That's crazy. They just let them know immediately.
Well, I mean,
Yelling
the
it.
client calls. Some clients have an open line with floor traders, meaning, let's say, you know, Rob is the floor trader and he has an open line to the client. The client's literally telling him, I want to buy this, 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 and this guy is just placing orders and executing it. When this guy, you know, body language is the only piece of us as humans that cannot lie. When you're on the floor and you see guys smile, perk up, and he's like, oh my God, I'm getting in 1,000 contracts. LeBron, you got to go on mute, but when he is doing that, it indicates, you know, there's an opening call for a trade and it's going to be predetermining the rest of the day most of the time. And if you think about the orbs class that we had, the first 30 minutes on the floor were instrumental because it really set the body sentiment and the floor sentiment in check. If you see that they're somewhat bullish, they don't care for anything else, you know, it typically goes in that direction of the opening call. And that's why we have, you know, in market profile, we care about 4 opening types, and you can usually tell what we might have on type of day with the opening call if you're on the floor. And then, market profile has those 4 auction types that help you navigate the market and kind of see the body language of the stock market in the morning. Okay. On the trending markets, that just means that we don't agree on the price, right? If you're trending higher, that means that we really think the price should be higher than what you had it before, and we're willing to pay more. And as the auction is going up, you're looking for the topping process. You're looking to see if anyone's gonna fix that, right? If anyone's gonna have enough inventory to stop that trend. And markets typically, right, we don't go up and down. We go up, we balance, then we go down. And that, I would say, that occurs everywhere. It's not like we hit a level here and we sold off, right? When you look at this on a daily time frame, we accepted the price and then we spent quite a bit of days, right? You spent 1, 2, 3, 4, 5. So you spent 7 days in balance before what? Well, before you decided that that value up there is too high. And when something's too high, what do you need to do?
Search for new value lower.
Lower.
Yeah, you want to find buyers lower. Just like when we were auctioning higher, we were in search of what?
Sellers.
Yeah, we want to find sellers. When you're auctioning lower, you want to find buyers, and that's exactly what happened. You do not go up and down immediately, and it doesn't happen on any time frame, guys. Here's ES 5 minutes, even though this was a lot of you guys on Friday, I don't know, there was not a lot of opportunities to trade, guys. And even though it might have seemed like, man, this was a great day to trade, this was a really tough day to trade, guys. There was a handful of opportunities, and I'll kind of go through it. Here's 2 days of somebody asked, does this apply on different time frames? It does. So let's take a look at it. This is your Thursday. What do you think happened here in this box that what do you guys think is here?
Accumulation.
Well, accumulation, but what about value? Is the value below?
No, there's value there.
No, they built value here. They're interested in building value here, and this is looking more like a P shape. Then they said, well, I don't think we agree that the price is even fair at this level. And they're like, okay, well, let's go and auction higher till we find, where the sellers step in. Well, now somebody asked, what do you expect when you go above value? Well, we expected here to see what?
Sellers.
And they went in,
Selling.
and then look at the bottom. The bottom came back in, and they're pretty eager to get this thing going, right? Then they started buying the back, and this is called two-sided activity. When you go up and down in the balance, this is called two-sided trading. Two-sided trading means I sell when you go high, I buy when you go low, and it just continues till when? Careful how you answer, please.
If somebody breaks that, another time frame,
Other time
participants
frame
come in.
people join, right? So let's see, this is our value right here. So at 2 o'clock, I'm sorry, at 1:15, they decided to break this. I prefer not to take these trades. You guys are welcome to play the momentum breakouts. If you're to study this back over time, you're going to fail 78% of the time. Okay, these breakouts fail a lot. If it was so simple, then everybody would play just the breakouts, right? Because what happened on the prior one is you broke out and then you got destroyed if you took that. Okay, but what do you want to see when you break out of the value?
Volume.
Volume.
To move
Okay.
fast.
Let's just check some things, and I'm giving you a little bit of more details, right? One is retest. Yep, we'll get there. Okay, so look at these candles here, 2 candles here. So you're breaking out on this candle, on this one right here. And you're breaking that at 1:15. How's that for breakout?
Not good.
Okay, then you
Sketch.
have the following candle, which indicates a stopping volume. You have a lot more volume, but the body of the candle is tiny. Okay, that's typically your alarm, like, okay, something's not right. Okay, then you go on and look where they come back. They went higher, right? And then they come back to the zone, and what do you see now? Look at the
Buying
volume.
tails.
You're
Aggressive.
seeing buying tails,
More
and they're
value.
showing up, and they're telling you, yeah, I think we want to shift the value higher, right? Now the value is shifting higher, right? So let's just look here. And let's say this is our value right here. Okay, so we shifted higher. They set the value, the boundary, sort of brackets, top bracket, bottom bracket. And this is the art, like, right? Could I have grabbed this one here as well? Yeah. I'm grabbing the first one I see, and then what I typically look for is I want to see at least 2 taps on the level that I'm setting. Right? This one is not clean, but this one's clean, this one's clean. There's 2 grabs here, and this becomes a pretty good range or a bracket that we're set in. Okay? Then you see us defending the bottom, which was value area high of this one, or the top of the range, and then we're trying to shift higher. What's important to note sometimes in these brackets, I like to look at the volume profile of these and see within the bracket, what is the majority of the volume? Where is it occurring? Well, if majority of the volume is happening and the price is staying above the POC, what does that tell you?
Probably gonna go higher.
Okay, now take a look at the details of this. It's important because the devil is in the details. Every time we went below this value area, low and high of this bracket, I just basically drew it to here. Okay, when we went above this value area high, what happened?
We went to the opposite.
Okay, we went to the opposite. Then, how many times did you crack below, above value area high, and did you make higher highs? In this case, you made a higher high, not a nice one, but you broke it. Here, you did not make a lower low here at the extremes. Here you did, you're coming back, and then of course you're breaking that. And what did they do after? We
Read that.
broke out of this, and they're saying what?
Use
Value's
it as a
higher.
support.
Yeah, they don't like it. They don't like it lower. They want the price to be accepted higher. Now that, the final piece of that is when you look at these day to day, right? The blue lines indicate each day breakdown. So now when you look at this, and I believe this is still our weekly profile, let me make sure. Yep. So now when you look at the weekly profile, which is basically your composite for last week, let's take a look. So on Monday, you're basically on the bottom here, and you opened and you're trying to establish value here, right? You're establishing the value, which was here, and then you peaked above, you cracked it nicely, and look, you came back. If you only focus on, for instance, on this area right here, this would be very important, informative for most of you, right? I would say, if you look at this value here that was built, where did they spend a lot of time and where was the volume? So in this case, the POC at 205 would have been a great buy if they brought it back down to this level, because the value area low is in there, and they, obviously they didn't come all the way down. They went to 22. I think they might have an ETH session, but don't quote me on that. Okay, well, they did a few days after that. Now, the goal is to get out of this, and they want to auction higher. And then you can see the following days, they're actually happy trading in the value of the bracket of that week, which happens to be right here. So the bottom section here is giving you a clue what happened.
Other time frame buyers.
Other time frame buyers stepped in
Huge
really aggressive, right? They stepped in at that 87 level, pretty aggressive. I think it was 89 on smaller tick size, but they stepped in really nicely here. And then they basically shifted, right, the price action to be in the upper portion of it, right? And this is the value that they believe the price should be. There was no facilitation, no price acceptance here. That means they rejected what here? What does the single prints like this buying tail indicate about price?
Aggression.
Aggressive bias.
Yes, and that they rejected the lower prices. It was advantageous to them, so they bought it up. If you're buying something like this with excessive tail, you're rejecting lower prices, means you want the prices in your perception of value to be higher. And of course, that's where we are now. Now, when you look at, where we opened low, where we closed, let's say right above weekly value area high. We closed there and we are really met now with the level that we haven't seen since what, 53.86. So now think about the price that can occur here. We did not like the value up here. We did not like above. Now you're back inside. When you went to this range to the bottom, you didn't like it. So what can you expect to happen Monday? Peak above, maybe fail, or go above and hold. And then, you would monitor maybe for some 53.97 level and see if they can fill this gap that goes all the way to 5.4, whatever, 3.3.
That's the last set of untested single prints.
Yep, this one right here. So does the value and this make sense? The trending, the brackets so far, kind of like a check. Does this, what we cover, make sense?
Yeah.
Yes.
Okay. Well, I'm gonna go back to it and then let's, we talked about this. I think we beat it to death. I don't think you guys care too much about history, but Peter did come up with this. Dalton picked it off of him and ran with it. I did post audio tapes for you guys in a Discord. You guys can listen to if you guys are ready for the next set. Well, I can release the next maybe 5 audio tapes and you guys can listen to those. It's a pretty good listen if you're in a gym or whatever, just kind of get your mind in on the market profile. So I'll post that. Do I need to talk about this? Does everybody understand the 3 components?
Yeah, good.
Yes.
Okay, so when we are looking at market profile, we are focused on price and time. When we are looking at volume profile, we're looking at price and volume. Okay, and a lot of you guys ask me, should I use market profile or volume profile? You can pick and choose, right? If you're a volume profile trader, but these 3 components are definition of value, right? Is how much time are we spending at a level? Are we finding facilitation there? Are we finding acceptance there? If we go to a level and you're not spending a lot of time there, just like you saw, that means you're rejecting that price, that you're not interested there. If there was a lot of volume, let's say on that, single prints that we saw, what would that tell you? And we auction higher. Well, most likely the other time frame players had a lot of limit orders sitting at that executed, and then the rest saw that, just like the guy on the floor trader. And what did the rest do? They followed, right? And then they came because it's so fast in the auction that they just do what? What type of buy do they do then?
Market.
Market.
Yeah, they just do
Slap
market.
the
Right?
ask.
You're gonna say, give me the best you can. I'll just click market buy. And that's one way to get into the market right there and then, but your price is not guaranteed, right? You're gonna get what's the best offer on the market. So
How often do you market buy or limit buy?
that's a good question. So if I see, the other day I did a market buy and a market sell. I was waiting and they came in like a 1/4 point short. So I paid 1 1/4 higher with the market buy. As soon as I saw that they're coming in and there was a stop sell, meaning there was a completed auction right above my level, I was like, okay, well, I can take a risk and I hit the market buy. If you're coming to a level a tad bit short and I'm seeing that there's a potential the trade would work in my favor, whether it's order flow or if you're looking at, previous balances or whatnot for confirmation, I do market buys or market sells. Typically not market sells. I rarely do market sells. I think your shorts have to be a little bit more planned than longs in the market. Because over time, I would say the market typically go up. Okay. Okay, here's the basic chart on market profile. Who's not comfortable with letters on the market profile? How many people? Like, do you know what they mean? So everybody's
Uses
comfortable.
all of it.
Pretty good.
Outside
Yes.
of like I know A and B set the tone most times. Like if you have a tail on A and B, usually it holds through for the rest of the day. And then I know D is the Europe close, and then we look for M for the spikes. Is there any like letter in between that has some type of specific value to like the
I watch for L period typically. L period is there and the M period can validate that, and M period cannot be validated until the following day. Usually if M period is breaking the high of L or low of L, you can typically go in that direction. I would say a lot of times you can play that. And I think we did the other day when it hit 60, 75. It was like 12 points on the level. And that was based off the level period L. Those are usually closing transactions and balancing on inventories between, and I just look at it to see if I can scalp the points. Okay, so let me explain for people that are not familiar with the letters. Don't get terrified of this. I know it can be intimidating when you see a profile, but all this means how much time did price spend at a level. So for instance, right, you have a lot of TPOs, right, here, right, time price opportunity. You have periods, F, G, H, I, J, K, L, L, pretty much the whole alphabet here. That means that a lot of time, price spent a lot of time at this level, whatever that level is on the price chart. That means they're really, really happy. And in this case, POC indicates that that was the fairest price we had. Then you have the value area high and the value area low, which you guys are comfortable with now. And that just means the extremes of the value area, which is our 68% inside here. Period A and B is fairly important because that we have a setup that we play off of it, right? And that's typically your A and B period because each period and each letter that you see is 30 minutes. Okay, so 30 minutes indicates one letter. Once, let's say 9:30, like I'm showing here, 9:30 to 10 is all A period. So if you go here, you can see where did the price go during the A period. It goes from here and it went all the way to here. And then you see the B period, right, came in a little bit higher above the A here. And then I don't think it went a little bit lower, which makes the little black bar here the initial balance. Initial balance is important because the C period usually would indicate what if you have a force break during C period. What does that tell you?
If we're having a trend day,
What do you guys hear me say like during live? Sometimes I mention it.
Expansion of IB.
Is this something with the IB?
When we say I say C period starting, what do I typically say there?
They have to break B period?
Well, you're watching to see if the C period after the market settled for the first hour, if the other time frame people have the ability to crack the initial balance, and that if you want to see a trend day, what period you want to see it in?
C.
C period is a good period to see it break. And if C period can't break and hold for that 30 minutes, usually sets up for a reversal type of play. Okay, does that make sense?
Yeah. What was the thing you were saying that you say sometimes when it's
That's
happening?
the A and B period, and you want to watch for the C period if it's going to cause an extension. I watch for C period to see what kind is it aggressive extension, Because they can break that, let's say in G period, they're breaking that, and the whole day they spent till G period inside the IB. What is the confidence of that day? Versus a period C breaking and continuing in the direction of the auction open.
It's balanced, right? Whereas
Well,
if
what's the
it's break
confidence
C,
level if I break G versus C?
C's early, so probably more confident that it's gonna go.
Okay,
C, you'll have more volume usually too.
typically. So let's take a look here. I'm just gonna remove some stuff here. Come on. Okay. So what we can do on TradingView, this is pretty cool feature. I'm just gonna hide the candles. If you go here and split by blocks, that's your split by periods feature. You can see here, for instance, let's take a look at Friday. I'm just gonna lower the increase the ticks. So I can see it. Okay, so let's take a look at this day, for instance, here. I think this was Thursday. Yep. So you have a period, right? This is your opening range, the orbs. And then it comes the B period, and how much do we dip inside? Not much, right? We went inside, clearly indicating that you're gonna have potentially, you know, you're not gonna have a normal day. What is the other option that we could have if it's not a normal day?
A trend day.
A neutral day?
No,
I don't think you would have
Normal
neutral if
variation.
you're making a higher high between the two periods right out of the gate. Right?
I see what you're saying. Yeah.
Okay. So then you have the B period, then the C period broke the B period, but the following periods, you see the D period, the Europe, somebody mentioned, we are consolidating and building value there. It's right here. And then comes the H period, and we break out of that, and then they started building value, I would say somewhere around here, right? And then they disagreed on that value and they went lower. Then you see that I mentioned the L period. Once you crack the M, you proceeded, you fell inside, you know, you didn't go to the POC, but you went to the B high, which was your, what? Be your initial
IBH.
balance high, right? You came back there and I don't know where you closed. You closed much higher here on the end period. But the point, what I'm trying to say is that usually when you have A and B periods and the C period comes in that direction and it breaks, typically the market will continue in that direction. It might consolidate like it did here, but a lot of times it will form trend days. So now if you look at this day, for instance, and you zoom out, what type of day is this?
Double distribution. B, or capital B.
Yeah, it has a node here and it has a node here, not a clear distinction of value, but you know, there was major value being built here. And look, they came back here, they dipped below, they opened here, and where did they close on Friday?
Above the value.
They closed above the value. So they're looking right now, the market is looking to do what?
Find sellers above.
Yeah, they're looking to find sellers, right? So on Friday, this is called what in terms of type of days? What type of day is Friday?
Open test drive.
No, day type, not the
Oh,
option
oh.
type.
D.
normal
Okay.
variation day.
Okay. And that would be normal variation because of what?
It broke one side of the IB and stayed out there mostly.
Okay, yeah, that's correct. How would you have made that a neutral day? How would this potentially been a neutral day?
Close under Close within the value.
Close in.
Close above the value, right? Oh.
Close in with the value. With an IB would be ideal, right? Remember,
Oh, I
neutral
see.
days have an extension. Neutral days extend higher, and they extend higher, and the price comes back in here. Neutral days usually mean, that neither buyer or seller had what?
Control.
Control. Neither one had a control. When you have a normal variation day, what does it mean? Well, one side was disagreeing on price, and we, let's say, went above the IB, and we stayed above the IB. And that's exactly what happened here. Okay. Does that make sense so far?
Are you thinking about that, like as the day is going on, that this is looking
Yes.
like a normal variation day?
Yes.
That black bar there is the IB, right?
Mm-hmm.
Okay, thank you.
Yep. So now, right, when you think about these auctions that happen on the periods, let me just kind of go. So here's your A and B, right? We had an A, the B period kind of stayed there, but they set up a pretty decent range relative to what we had recently. This is the average, I would say 34 points now. So they went there, and then you see the C period. What did C period do again? They proceeded to go higher. The D period, they made a higher high, higher low. So basically your value now, the value area low is being set for the day being here. And if you're, let's say, using volume profile, you could definitely use developing value here as well. If you guys look, here's your developing value now. And they're telling you, if you look at it, what is this showing you here?
It's going higher.
Yep.
Well, it's shifting higher, right? And then when you zoom out, and let's say you just focus on market profile, this little arrows and this line is telling you the value for that day, right? And we spent a lot of time between A, B, and C. We spent a lot of time, I would say, in this section. If this was going to be my value, if I was going to calculate it, I would say this is some kind of value that I would be looking for at that time when it's, if I was to draw a box until this period, let's say G period, this would be, let's say, I don't know H, I don't know any of these. This would be the value that I'm kind of interested, right, to know. Then you have the orb high sitting here, and then you have initial balance that's sitting there, correct? So now the IBL is up there, down there with single prints. You had here you had single prints, of course, they got erased because they built the value. And then ultimately, what did they do? Well, they disagreed, right? On initial balance, they said, well, most likely we need to go higher, and they did that. And then they met with some sellers in here, and where's the value now being formed? Well, simply it's here, right? I would say this is your value being formed at the moment. And C period again was indicating a little bit that you're most likely going to go higher. They gave you a nice little retest. They popped out of this. Could you have played this on the break of C period? Yeah, it would have been a safer bet than probably taking them. If you're looking at this level, 58, yeah, you've gotten a better price. But that would have been nice. And you also had something in this period here. You guys remember from the day prior. So C period, I do use it to gauge, what could we do? And in a lot of cases recently, C period was indicating a lot of, I would say, breakouts to the higher. Okay.
So it indicates
Back
it,
to the
but it doesn't
basics.
mean
So
that.
each period is 30 minutes. They carry selling tails and buying tails. They only occur on the top and the bottoms. That usually means that there's other time frame participants coming in, whether the price was good for selling or price was good to buy. If it was selling, you would have a selling tail and you'll have these single prints on the top. Like you see that it's only one period alone. There's no periods next to it. That means that there's other time frames that enter the market. And then on the bottom, in this example here, you have a really good example of a poor low. And what that indicates is that they were not able to get their differences together. And that means unfinished auction. Most likely they're going to revisit that and fix that to make it, whether it's going to be, access low or we're going to continue down, but there's unfinished business here. And there are setups to be played off of this, okay? Any questions so far on this? Does everybody understand the periods, at least the letters and what they mean?
Yes.
Yes.
Okay, so here's kind of the explanation of what we had at 51.89 level. We got the buyers in. This is a buying tail and it's pretty massive. The more TPO periods you have on the bottom, on the buying tail or selling tail, it's the indication of aggression. How aggressive were they when the price came to that level? And typically more than 3 is a good start, that there's a little bit of more aggression than normal. If it's 2 TPOs, that's borderline. 2 TPOs is the minimum you want to see for a completed auction. Okay, so let's say if this A period and A period were only here, that doesn't show necessarily aggression or eagerness to buy. It just tells you the auction was completed and not really aggressive participants were there, but the business was done there. Okay, when you see something like what you're seeing here, this is pretty aggressive. There's other time frame participants coming in and they're eager to buy at that level. Okay, this is the developing area for the day when you look at it, right? It came kind of B all the way to the B low. You could definitely extend that here, and this is where they agreed on a price. So now if you look at this, anytime we went above the B and D, we kind of auctioned back inside. So the concept of other, sellers coming in above the value was evident here as well. I believe this was August 5th, if you want to go back and study. On August 5th, they came back, and then once they established the value on the top, they're trying to hold it, right? And then they basically closed in at the POC. Okay, so selling tails, buying tails, poor highs and poor lows occur on the top. And then you have something that happened in the middle of the chart. Those are just simply called single prints. And single prints are basically your TP periods that break 2 distributions or multi distributions. I'm not going to say 2, it could be multiple. And we can find that, right? We can find that on probably higher time frames here. So let me go look here on the weeklies. We're going to hide this. When we talk of single prints, that means it's not on the bottom or top of the profile, okay? Just keep that in mind. So let me go here. I'm just looking for some single prints here.
Hey, Shorty.
Let's see what we did.
Do you like to go into the footprints, Shorty? Like if you have like, let's just say, I know you mark out like the single print start and end, but do you ever go into the footprints and look for any excess orders within that start and end of the single prints?
Of course, that's the only way. I would say that's the only way I can know in that imbalance where they exactly came. That's the only level that pinpoints where they were. Does that make sense?
Yeah, I've noticed it's like they always go back to it on NQ.
Yep.
Always.
Sorry, what level?
Like whenever you have single prints that come in, let's say on the bottom or single prints in the middle, you're looking usually for imbalance on the footprint charts, right? To indicate where exactly did the aggression come in, by what level. So
That's the
let's
delta, right?
Yeah, that's your footprints. That's your order flow. Let's kind of focus on this profile for just a moment. Right. So I would say you have, how many distributions would you guys say here?
3.
Yeah, you have 1, 2, and 3 on, which is pretty elongated, right? And there's a couple of single prints, right? And single print in this case here, you see, well, so look at the periods here on the weekly of T period. Price action here is clearly dividing here. They stopped, this is stop here, and usually what that indicates is separation of value for me. That means everything above this, right? We're going to be accepting the price, and most likely we're going to go to the extreme of this distribution, right? So if you think about the extreme, it would probably be here because they're nice. They did a really good job of leaving footprints behind, single prints, sorry. And they basically divided it like this. And you have a distribution that was kind of here. We'll color that one green. And then you have a distribution that's up to here. We'll color that one some color. This one. And then you have the last one. We'll find a color. And let's match that to, where did I go? And let's this color. Okay, so why would the single prints play a role is because once you have the price above that level, there's a high chance you're gonna trade within that distribution and where the value was at that time. Okay. So if you look now, this is a triple distribution separated by a nice set of single prints at each level. So this is, if you're able to auction above this and hold this level, what does it mean? Well, most of the time you're going to go to this level and you're going to see if these sellers are basically letting you in inside this price in the final distribution to trade here. Either, you come here and you peak above and you fail, that means you're going to go to the bottom. Okay. So now when you think about where we are, right? We are all the way here, right? At the bottom here, we're closing at 53.66. So this profile still has a lot that, just 1 week has a lot of distributions and rejections that occurred. Now you could have the same one that's kind of sitting here, right? So you have some single prints, not necessarily single prints, but, LVN here, and there's some single prints that started there at 55.33. So if you're able to, let's say, get in above that 86 level that was kind of here, if they're able to go above this level, well, I would say there's a high chance that they're going to revisit this level here, which also happens to be the gap at 54.32. And another meaning of this would be what? What about this? What if they get inside of this? What would you expect?
Go down to the bottom.
POC there.
Yeah, that means that they're most likely going to accept these prices if they can get inside here. And I would say high chance you go to the next value. And then, from marking of levels, what I typically do is if I draw these zones or I'm familiar with these zones, you will be aware of the extremes of whether it's weeklies or monthlies. So for instance, here, if you look, you have this profile and this profile. You could definitely merge this profile to know where's the value of these 2 weeks. So if you're able to get inside here, this is big. You're going to be happy trading in here. That means you're being accepted, get inside and hold. Most likely you're going to auction to, let's say, 55, whatever, 70. But as of right now, this is the culprit where you're stuck, and we're going to try to go there. Okay. On the IB itself, I'm going back. When you have an IB and you go on a C period above it, like we have a few times. So when you have profiles like this, now let's say the C period, like this one here. If you see the, the IBH, which is sitting here, initial balance highs at 58. So we spent, C period, D period, but we dipped back inside. And then again, we disagreed. We went higher. What does this mean if you're not able to hold above the IB? This was our initial IB right here that I set. We closed above it, but we did not have a lot of confidence going above it. And if you don't close the next 30 minutes on the IB, what does it mean?
Failed auction.
It's a failed IB auction, right? And typically, if you go back here on failed IB auction and if we fail to hold the first 30 minutes above it, then most likely we'll revisit the opposite extreme of IB. Next day's initial price reaction is likely opposite direction of failed auction zone. And typically, these failed IB auctions tend to be revisited 5 to 7 days, 70% of the time. So if you know, for instance, that you went here and you're not able to, close above there, right? And you look at the candles, did C period close above?
No.
No.
D period, did it close above?
No.
No periods until H period closed, I would say, above. So now when you think about Monday, what would you watch for? Where would you turn super bearish? On
Fall
day
back
to day.
inside the IB.
Yeah, this would be really important. If they can't hold this in terms of levels, this would be highly potential here, 53, 58, kind of 344. Okay, that would be a big level to pay attention to, and that would be a failed auction. Ultimately, if they crack below this level, right, there's a high chance you can catch what? A failed IB auction says you're going to go to the opposite 70% of the time. There's a high chance you're going to visit the IBL that's sitting here. So these would be the two levels, if dependent where we open, right? This is our IBH, this is our value area high. Depends where we open tomorrow. Let's say we open above PD value area high, but below the range somewhere in here. And then we crack that value area high. Probably this is the first level you're going to go to. If you open below this, well then, it's telling us a lot, right? You're rejecting the close where you were. If this is our value area high, and you close slightly, I would say, I think above it. Take a look, see. Yep. I'm pretty sure we closed, yeah, so we closed right inside of it, inside the value area, which is, it's a neutral day with the extreme bullishness, right? So is there a high chance that tomorrow out of the gate they could do this? And then sellers are showing up here and we dip inside, right? That's a really high potential setup, right? Because there's a lot of bulls that are stepping in, and the IB auction, once you lose this is what you're, in my world, I don't have to necessarily catch all the points, but if I can catch these points with certainty between 58 and 42, that's pretty good. If I know that if you lose this value area low, is this the best place for me to short here?
No.
Why not?
It's in the middle.
Well, it's at the value area low, right? And probably the value area highs as well there. So it's not an ideal short, but if I'm able to lose, let's say, this POC of 65, could I take it all the way down to this level, 47?
Yeah,
Yeah.
that'd be the better entry, right?
That would be a much better entry than me shorting right here,
Or if we
which
lose it,
happens to be a POC as well on the
and then
weekly.
what if we lose that and then come and test it from the bottom at like 43?
Oh, that would be very good, because 43, I'm not going to say it just yet because we're not there, is a huge level for a reason.
That's the
Yeah,
do not.
that's, yeah.
Yeah.
Longer dated puts there.
Yeah, once we lose that, that becomes a huge level, and we'll cover it, right? But so far, does it make sense? The IB failed auction, everybody understands the periods and TPOs and how they're built. Commonly, you'll hear people say we're framing up. Does everybody know what that means in market profile?
We're not losing 50% of the previous session.
Well, framing up means that, the trend is set by the 50%, but you're not making lower lows. Basically, if you go on 30 minutes here and you keep your profile. So here's your, let's see, this is weekly. So here's our Friday session, right? So you have the A period, B period, C period. Then, we did not frame down yet. When you have a lower high and a higher low, that's not framing down, is it? What is the definition of a framing down?
Lower high, lower low.
So this here, this candle right here is what?
Lower high, lower low.
Lower high compared to this one, and it broke the low. So this candle here started what?
Reversal.
Started framing down. Then you have this one that has a lower high and it cracked the lower low, but it's not very big range breakout. It's a tiny candle, right? At noon. So how could you play this? Just kind of hypothetically seeing what you guys are thinking. If you're not, if you, let's say you don't have candles, and a lot of times that, you know, I'm not looking at candles, guys, too much. How would you play this?
We can break.
Let's say we're at E period. And F period closes, and I give you a scenario, you don't see the rest. I'm trying to make it where you don't see G period onwards. How could you play this?
We can reclaim the high of E period as a continue.
Okay, that would be one. Anyone else?
The break of IB on A period.
Okay, on a break of this right here, 58.
But I thought on the bottom though.
Okay. I'm sorry, I'm not following.
So I'm saying breaking IB on the downside first.
On the downside, okay. But where would you look for trades? What would be your trade? So you would look for a break of IB on the bottom, right here, which had access on this period, right?
I would look for the bottom of E period to hold.
Okay. And each one here, for instance, B and C, they're making higher lows at 33. So how could you play this? Anyone have, just looking at market profile itself, you don't know G onwards.
I would play the reverse, so it's at the bottom of the node.
Which one? Okay, so this is what he is suggesting is that when you crack this level right here, that you could go and go long here. Where could you put your stop loss if you're doing this?
Bottom of E.
Bottom of E is also good. It's more conservative. Considering that this range was fairly tight in F, where would your better opportunity be for stop loss?
Bottom of F.
Well, I would say if you're gonna do something like this, let's say you're taking this trade, you're looking for something like this. You want to be below the F, right? Because F left in between E and F, it left some single prints and we auctioned higher the next period. So below this one slightly becomes a pretty good setup for so you don't get stopped out immediately. Okay, you don't know anything else. You know this. What do you target? Where's your target if this is your entry?
Top of D.
Okay, top of D is aggressive. Why is that
Or do
aggressive?
top of C.
Top of C would be less risky for you.
You have a selling tail.
You have a selling tail, and now you look at your risk reward. Is this what you want to trade every day?
No.
No. This is not what you're looking for everyday trades. Is there levels that we knew that they targeted, you know, what KJ is suggesting? There was levels that they left in overnight session that were not tested. For instance, 72 was an overnight high on Friday. And then above this level, we had some quarterly and year-to-date value area high sitting along, I would say with this level being here that we are familiar with. Would I target 86.25 from here? It would be a wild guess for a runner if you're on a small side to keep that. But considering the day you had and the balance you had, the probability of us breaking this and running this much,
Low.
not very high. Right? So if you're gonna take this, now when you look at the risk to reward, your stop loss is pretty wide for how much money you want back. So let's say you took this below E and you took this, it's not a bad trade. 2 to 1 is not bad. 3 to 1 is something you wanna aim. So if this is the case, how else could I find based on just this data where we can go next? We just know up to the the G period, right? How could I know what could be the next target for the day? We know we have a normal variation day. What's another way for me to,
You take the range of it.
okay?
Oh, IBH2.
What about IB 1.5? Could
Yeah,
that be a
that's fine.
target ever? Could this be the target? If it's a normal variation day, somebody mentioned it in the beginning. I think it was Erica. What doesn't happen in a normal variation day?
Doesn't break the other extreme, the other IB.
It doesn't break the other IB. So if the other IB is not going to be broken on a normal variation day, you can target that you're going to go up to what level before it becomes a trend day?
Up to 2 times before it becomes a trend day.
Which would be sitting here. So if you're, let's say you have the diamond hands and you're like, okay, well, I can target this from an entry here, that's doable. But the probability of you sitting in that whole trade is very low. And somebody's static is really loud. Is that mine or?
You gotta leave the channel and come back. It's the only way to fix it.
Yes, can you hear me? It was so bad. I just couldn't speak over it.
Yeah, you're good now.
Okay.
It's still there, I think.
I've had that bug.
Yeah.
Yeah, you have to leave the channel and come back. It's just
Yeah,
the only way to fix
See,
it.
the framing happened and then the E period caused the framing down. So if you want to take the E period high, let's say you're able to auction higher than this period. Well, that's also not a bad breakout long, but you have to be aware that your risk here, taking the long here, is much higher. Does everyone know why?
Is that D period?
Well, you have the D period, but now when you think about it, if I'm taking a trade here, look where the fair price is, 7 points higher. When we dipped lower, you're dipping of the perceived value area low for the day. And I have to say, but that 42, 43 area, guys, is your year-to-date POC. And it was, when you went above and you're coming back to a year-to-date POC, it's a long 10 out of 10 times. Especially that you form the value area low at that level. Does that make sense?
Can you point that level out in the chart again, please?
Say it again.
You can just point that level out again on your chart, please.
Yeah, so that is a year-to-date POC. So if you guys go on higher time frames, right? Let's see, we look at PVP here. Over here, let me delete this. Just want to delete a bunch of stuff that you guys don't need. So now when you look at, for instance, here's your January. Let's say you draw your FVP here. Look at that POC where it's sitting, right? And typically, as you guys know, I just do something like this on a major level. So this is right? This is a big, big level because it's a year-to-date POC, and then your year-to-date value area high seems to have shifted a little bit, sitting at 54.20. So when you have these big levels like this one that's coming and they're lined up like this, and it happens to be the intraday value area low, it should give you more confidence that you're going to get a response here on a day type that we formed already. And that's just contextual. The day type you're forming, the value that's being built is value area low, and then you go on and you can add more context to it, but this becomes a very decent long, whether it's intraday or even, to target higher prices of next levels, right? Like maybe this here, 53.80 or so.
Is that when you typed in this could explode? I saw
Yes.
that. Yeah.
Yeah. And that's where they went. They went literally to the extreme here of that prior quarter. And this week's setting up to be probably the most trappy week you guys have seen so far.
I have a question on that level. If it were to play to the downside, let's say it goes down and then comes back up for a retest, would you do like a couple months puts options, or how would you play that?
I already got them once they entered above the 3-month sig here from the previous balance. I already got the SPY puts.
Oh, okay, I see.
Yeah.
Did you for like 3 months or
It was
several months?
October.
Okay.
I was playing October, and mainly the reason why I played, when you're breaking a level of this significance, like 8 months POC, and something is at a fair price, is this what you expect?
No, see a big reaction.
So I was expecting that there's going to be more, something like, let's say, this guy right here. If I saw that, then I would have been like, ooh, screw the puts, right? They really believe that this was fair price and we're going above the fair price. But considering the Q2 quarter right here, value area high, and having the overhead that we had, that we talked about, 86 or whatever the level was right here. I forgot the level. I think it was somewhere here. Having this level here, I bought time to give myself an opportunity if they're to go above and they fail, that it could still play out. But I did get puts already. Okay.
All right, thank you.
Good question. So let me go back. I think we're okay with this slide. Is everybody understand the terms, the poor highs, because they actually lead into the setups, which we're going to cover next. You have buying tails, developing value area highs, and then I had something I was going to ask you guys to analyze this, right? You have the other time frame buyers that stepped in, which is a good price. Then you have a normal variation, which somebody already called out that it's there. And it looking like a P shape, right? And then you left a poor high, which indicates what?
Finished business.
Yeah, most likely we're going to revisit that, right? And then the setup that was being, worked on here is that you could have looked for opportunities to do what?
Go long into that.
Into the poor high.
Yeah.
Yeah, and if you now look on, for instance, on the daily profiles, there was quite a bit of them, right? That they gave you, that they were going to run this a little bit. Let me make sure I'm on RTH because we dropped. So it should be somewhere where. So here's the date that I extrapolated for you guys, which was sitting here. This was the axis, right? Just gonna go back in here. This is the date that we're looking at here. Then you had a clear poor high here, sitting right there. So then you came and you opened right above the POC and you dipped below it a little bit. I believe it was a period. Where was your opportunity to go long here? For the most points, because if you waited for initial IB to be set this day, I think you missed the train. And of course, we ran, but the reclaim of what?
That P that you highlighted.
Yeah. So you had the POC that was highlighted, and then let's take a look at this. The 52 level, why would that be somewhat important? Why the 52?
You're breaking value area high.
You are breaking the value area high, and look what they did kind of here, right? So you had the value area high here, and then the A period, and look where the B period came in. They came in, very close to that level, 3 points shy of that level, and then they proceeded to go higher, and then of course they cracked the A high and C cracked B high and so on. So that indicated that there's a business, and if you're going to take a long on, let's say, the retest of this level right here, what would you target here in this scenario? if I'm taking a poor high, and I'll go over the setup here shortly. If I know the day left prior a poor high. Okay, and this is the day that we are on, and they're opening inside the value, a little bit more bullish, right? Because they open right at the POC. They lose that POC and then they reclaim that POC. That's a first bullish sign that you have. The second bullish sign would be what that you saw here.
The amount of TPOs in the A period.
Breaking above the value area high.
Breaking above the value area high because it's indicating what about price and acceptance?
They want it higher.
They want it higher, guys. They're rejecting your price here. So this was the value of this day here. They open, then they crack it, right? Here, they cracked it. You could have taken that and they gave you a B period high on a retest. That was good. That was not bad to take that long and, take it for a ride much higher. On the opposite side, right? So once the day finished, right, they opened way low here and they closed at the value area low. Is this a bullish day? The context is important. That's why I'm asking you. So this is the axis for this day. I'm going step by step to get you to a picture that you should be seeing now. So we had the axis and sell-off, right? Is this a bullish close or bearish close?
No, close. Bearish.
Very bearish, but is it so bearish?
No, we're still.
I mean, if this is the value area low of this day and this was the value area high of this day, where does it become super bearish?
They get back inside previous day value area.
If they crack inside this Mondays, which was the profile that had this massive axis up and they built the value up here. So if they're able to crack, let's say below this level here, what would that mean about the price that was spent above?
They don't want it.
They don't want it. And to be honest, there's not a lot of structure that would support it if it starts, let's say, like losing. So then the following day they open, right? So here they open here and they close, then they open much higher and then they closed at the bottom, right? Then they somehow, they created a gap over this zone, which was really, really important. And then they proceeded to go higher and you can see the structure that they left behind. So you have A period, a little bit of B period. So, I mean, you have, you have access all the way to 306 here. So what do you think will happen if, let's say, you lose 306 here? Where could you target this drop?
4 high and then 2.
The poor
capital.
high is done. The poor high
Oh.
now, no more there, gone.
The gap.
Yeah, the
Yeah,
gap.
there's a high chance you're gonna go back to all the way to this zone that you're defending. That you gapped over it, and this would be the area you want to go. Right? So now you go on the next day, right? They had a bunch of poor structures on the bottom. So if they're able to lose this, let's say 306-ish, they have a high chance that they're gonna drop it probably 40 points, right? Then again, they printed another, right, access high 2 days in a row. They printed access high. And then they proceeded to go higher, right, on Friday. And they built or they created another access high with 3 TPOs at the top. And we close inside the value, right? We are, in terms of value area high, it's shifting. Value area low is shifting higher, right? Your buying tail, if you look here, in brackets, when you have buying tails, they don't carry as much weight, right? But unless they're going to a key level, I don't see 327 as a key level in this price action, right? So now when you think about this, what's happening here? We, spent some time here, and then majority of the time was spent in the upper half, and we closed inside the value. What would have been the ideal close for this?
High of the day.
Say it again.
Ideal close to continue higher, you mean? high of the day.
Yeah, ideally they should have closed closer to high of the day. But then when you look at this profile from here, which the context is the king, do you guys remember when I highlighted this area a few times during live and I sent a few slides on it? Do you guys remember this August 2nd profile? I mentioned it a few times because this is the profile that initiated the gap down, and also well, this was the range that we were playing before, right? And this is the profile. So now if you reject this value to the upside, then you know where they're headed. But now you're accepting this. So now if you go above, and let's say you get another access, what are they telling about this value higher? Probably not going to happen, right? You're looking to come back all the way down, which should be the weekly POC here at 45. Does that make sense? Kind of what happened? The value is clearly shifting, right? Higher, but besides this buyer on the bottom here, I don't see much. Let me merge them all. Here's this. Now you have access on the bottom. Your value area is here. Your value area high is right here, which matches at 78. If you're not able to crack this and disagree on this price, most likely you go back and we auction and continue in the bracket until the news, whatever day they're coming out. I don't know if it's Monday or Wednesday. That means the market's waiting for something. Okay. There's 4 opening types that you guys should be at least familiar with. Open drive, open test drive, open reject reverse, and open auction. When you think about the confidence level, and that's really what the market is about, and when you're auctioning prices, that's what you care for. From the weakest to the strongest. Open auction, what do you guys foresee that being? Like, what would that look like on a chart? Yeah, you're just opening and it looks like this, and typically open auction leads to what type of day?
D.
B?
D.
Yep. Usually a compressed D and the bell curve looks like perfect. And POC right in the middle, not skewed, nothing, perfect. When you look at this lately, right, I would say we've had a lot of open drives on the bearish front, right, where we just basically right out of the gate, when you think of an open drive, you know those race dogs when they release them. Imagine a race dog that went forward 100 yards and comes back and then he goes forward. Would that be an open drive? No, that would be an open test drive. So in terms of like, how do you visualize this, right? So in terms of open drive, you want to make sure when you open, let's say we opening at this level, and I'm trying to find this thing. You're opening a level right here, right? Open drive just means you're going and you're not looking back. You're not cracking the opening of that range. You're just going higher. Open test drive means, let's say the dog is racing, right? And they're starting from here, right? These are the little boxes. Well, imagine a dog that goes and comes back to a level and then it continues. That would be your open test drive. What do you guys think this looks like?
The dog started running and then turned around.
Yeah, the dog chased a squirrel.
Yeah, the dog hit and it's like, oh my God, what happened? And then he goes, okay, I go back. Does that make sense? I'm trying to give you an easy visual because if you guys think about periods in this, you guys might lose yourself. And I can definitely post, TPO charts of how it looks, but your concept is to figure out which one are you having.
Could you give a open test drive example like you did on the right there?
Open test drive like this one, yeah. So if you have an open test drive, is this what you're talking about?
Just like with a like candlestick, like how you did on open drive.
Yeah, okay. So on open test drive, let's say you open, and let's say we open between, this is value area high, and this is PDH right here. And typically you're going to reject off a PDH, PD low, extreme value area high, low, weekly highs, lows. Let's say you open here and you come back and you hit the PDH and then you come back here, let's say to a level, and then you continue. You open, you tested it, and you continue in the direction you started. Okay. And in this scenario, this would be, open test drive. Out of this one, you could draw open rejection reverse. And what would that look like?
Maybe price.
Yeah.
You went back down once you tested the PDH.
You tested the PDH and you didn't like it and you cracked the low, and that would be open reject reverse. And this one and these typically can lead to normal variation days. This one is what? What would you guys associate open dry with? What type of day?
Trend day.
This is a trend day. This can also be a trend day or what?
Double distribution.
Double distribution, because the confidence is not as high. Second highest confidence day is what? Double distribution day. Right, and then you have an open rejection reverse. This means this one is a little bit hard to read and probably the hardest auction to notice. But once you see the low is being cracked or where you open and what you hit. So for instance, let's say this is where we open. We go higher. You reject this level that was the importance, let's say 86 level. You reject and then you click this level, you crack it here. High chance you're going to continue here, guys. As long as you don't reclaim your open level here, high chance you go in the opposite direction, and this becomes most of the time will become a B shape down to the liquidation. Because especially if you spend time here, that's going to create a high volume node. This is going to be in balance, and then if they don't slow down, of course, this might not happen, but this can lead to a trend day or a double distribution day. And then open auctions, if you can avoid these, that's the best. If you're quick enough to trade, you can definitely scalp these. I can scalp them, but then I also incur a lot more commissions on my account than any other days.
Would an open drive be like a capital P or a lowercase p?
Always. Typically, that's the result on this one. You have a P or a B.
And the open rejection reverse would also be the double distribution, you said?
It can be, right? It can start. And typically when you see, let's say we're in an uptrend or let's say in a downtrend, open rejection reverse can also be as a result of short cover rallies a lot of times. Because think about if you're on the bottom, you're selling off like what we just had on August 5th, and you come to a level that looks like this. We open, right? You open, let's say, and you reject this level on the bottom, and then this value area high on the top, you crack. Well, what happened to these guys? They're most likely going to cover, right? And these type of days are usually driven, when you think about the buyers and sellers, this is driven typically on the bottom by weak sellers. Why do I say that? Well, weak sellers, they have really close stops. A massive strong seller doesn't care if you crack this level. Like his level is somewhere else, right? Which you're not going to reach. So a weak sellers, they basically help initiate the move to go higher. Okay. I'll ask a question here for you guys, I guess not for myself. For the open auction, do you guys want any drawings on this, or does this make sense?
If you could do like just a quick one.
Sure, I'll add them to the slides before I distribute them. I have them already, so I'll send them out. But and this is more of a label. When you guys are trading, don't pound your head. I got to get this right. I got to get this right. This is a label, just like a day type is a label. It's a label on what you're seeing. It's not, doesn't mean your certainty is going to increase and you go all out and you go increase your position size, it doesn't mean anything, guys. It's just telling you potentials, association with the context of the date types and what's happening in the market. Okay, don't bet your house and stuff just because you know the open type. Okay, setups to look for on market profile, and some of these are my favorite, right? That I look at, right? So double distribution, that's probably my top one, especially when you have a nice set of single prints like I showed earlier in the weekly profile. This one yields a lot of returns, at least it does for me. If you're having spikes at the end of the day, and we'll cover what that is, that's a really, really good setup because a lot of people get piled in long or short on these, and spike is, to me, just works beautifully that it tells me what is that pivotal level that they have to hold. Otherwise, I'm not looking for longs or shorts based on that level. Initial balance extension. A lot of times if you're just initial balance trader, right, and there are people that do just that, a lot of times you're going to miss a lot of good opportunities between 9:30 and 10:30. So waiting for initial balance is a good habit to create, just so you guys are not itching to be in a trade. But there are setups with the initial balance that, whether it's C period or retests of IBHs that play a decent role. Poor high, poor low. I think we touched it briefly here. And then you have access low, access high. Those become also pretty good setups to play for, but they are not my favorites because, especially when it's a longer access, you got to find where that emotional buyer or seller is sitting, and it doesn't have a lot of certainty for the level where to go short. So it's not my go-to setup that I look for. Double distribution. So this is my bread and butter. I do like this setup. And it's the second highest confidence in terms of days, right? And then the retest of these levels play a big role for me in terms of profits. So typically where you agree on the price and then you're dividing by set of single prints. So the way it would look like, is we agree on this price right here, right? And then emotional buyers come in and they do the markup, right? And then they slow down again and they agree here. Well, when they come back for a retest of this, let's say they go here and they come back for the retest, there's the single print zone that becomes very important. And that's where I look for long opportunities, right? Oh, and the same can be said if I flip this to the short bias, I will look for short opportunities as well. Okay. If you look for this and you make this the setup that you trade for a week or two, like it's not bad to document how you did with this setup alone, and you will find your own favorite setup, and you don't care who else trades what. If you don't see your setup that you enjoy and you trade and you're profitable at, just don't take it. And there's days where this might not happen, right? Double distribution days are not common. So for me, do I solely rely on double distribution? No, but if I see it, it becomes a very good setup. Okay, so here's this, and I'm just gonna kind of annotate it a little bit. This is, a massive profile, and it's a double distribution with the really what concern that you have. Well, few things, right? You have this massive access high that's sitting on here, indicating the prices above are being what?
Rejected.
Yep, rejected. And in this case, we closed here, so this probably could have been that this was a period M, that there was a spike associated with this as well. And I'm just looking here based on the picture that I have of the split blocks. That's what I would assume, that the M period spiked, and that's what happened. But in terms of price action, there's something clear where they distinguish the two, and that's right here. You guys see this LVN? So when you zoom this is what I usually create. And this would be the separation of two distributions. One here, and the bottom one would be here. So how do you guys think I would play this? And this occurred in the F period when they broke out of this, and the G period and H never went below. Does that make sense? Single prints in the middle based on this chart. Does this click for everyone?
Yes.
Okay, so now when you highlight this area, right, you're waiting to see when the price comes back to it, how's it going to react, right? So ideally, right, so if you look at it, this is the price action that we had, this is the single prints. Notice the action was split into distributions, this separation of value. So there's 1 and there's 2 with the poor high. So now this is what I would be waiting for. And where would you, manage your stop? Well, it depends on your risk appetite, but somewhere below this zone, if you can find any historical levels to the left, but you want to be below the bottom of this. Does that make sense?
If there wasn't a major or like a good historical level, like a value area or something, could you use the open?
You could definitely use the open in this case. That was a pretty decent level. And then here, you had access, but I think that's just far, 10 points. And if you're targeting 70, maybe that's not bad. Because if this is the poor high that we are looking for, roughly 70, call it, let's call it 65. And let's say your entry is, what is this, like 53, 36. Yeah, it's not bad. So, I mean, where do you want to manage your, 6 points? 6 points to catch what? 35, 40 points. That's not bad. That's a pretty good return. Then you can manage your risk based on that. And the open is, like you said, in that direction. So you could go right below that. Right. But this is the setup that I would look for, where we split the area, split the value on the two, and I'm looking for the retest. In this case, it was a bullish one. The orange line indicates the price and how it went. And I'll be looking to see what happens when we come back to this level. And then let me see if we can quickly find it on the chart. Does anyone have questions on this? I'll go look for a live example. Any questions on this setup, guys? Anyone? Okay. So let me see. I think we found one earlier on the weekly. But let's see, maybe we can find one quickly here. Okay, there's one here. Not the best one. And typically you want more than 3 TPOs in the distribution, just something to keep in mind. Okay, so here's this one here. I mean, it's separating the value right here. So now if you look at the candles, here's what you could have taken. So this was at 615. He came back, perfect hit 615, and then I guess it went as low as 604. Is that something that you could have played, right? So this was a selling day. It seems like we were going much lower. They came back to a retest, and then of course the next day they went above it, but they failed. Tests above and failures are much safer for me than typical first steps. But when you, excuse me, when you come in the first time and you hit this, I would take that short on the tap. And you can manage your trade. In this case, it was 6 points and you would have been yielding probably net of about 8, 10. So 11 points, almost 2-to-1 trade. Could you use this as a scalp trade? Yes, definitely. The next day when you opened above this, right? I'm sorry, you opened below this and you cracked higher, right? You peaked above the initial balance here and you failed and then you lost this level. That would mean much more to me than any other setup here. So that would have been a nice short and a potentially a swing short, and you could target, initially the value area low of that day here, which would have been a 72. And of course, we had that massive gap and we continued. But that's the setup in question that I'm talking about. Does that make sense? Could you guys recognize it? And it's usually day to day, week to week that you're looking for.
Wow, that was a great trade.
This one was pretty good. This one was pretty good. And, this was, I think, when we were looking for June value area low as well. Okay. Does that make sense to majority or everyone?
Yeah.
Okay, there's another one
Yes.
here. So if you guys look, for instance, here, take a look at this, right? This looks like a nice double distribution with a nice set of single prints and it was a J period. I have no idea where this takes me, guys. I'm just gonna zoom out and give you a retest where that was, 53.67, I believe. Is that what I had though? Oh, it was here, sorry. So this level, 53.67, the bottom. I'm just gonna color it differently, so I'm slightly dyslexic myself. $53.67. And look what happens here. Let me go on smaller time frame. They came back to the level. You would have lost this trade, the first retest, but look at this. They've been stuck a little bit at this level, and guess where we are right now? We are right at the point of the split of that level that we identified here. So if you were to go on a weekly, it wouldn't really make sense because you would already have filled this because that price was already traded prior days, but this day left it and it's a huge volume node and they're coming back to it now. So if they're able to establish that price just from that one day, it would mean much. But when the day is so far out, you're talking about June 11th and we're in August. Typically, when you have a double distribution like this, I don't like to count it more than 7 to 10 days. Just FYI, when it goes like this so far, the market has a memory, but on a single day like this, it doesn't really make a difference. If this was a monthly single print and we're coming back to it, it would mean a little bit more. Does it make sense what I'm trying to indicate, or?
Yeah.
Yeah.
Okay. On the monthlies, you can definitely look for them. And this is a monthly profile. There's some like sitting right here at 51.25. And I don't know how far we went, but that was like one that initiated the split the value at some point, and they came in at 51.40. I thought it was lower during oh, well, there's that one. So that one came back right to it, to the monthly. And usually when price goes more than 7-10 days from individual, don't bet your money too heavy on that individual day single prints. On the monthlies, like you see here, a lot of times they will defend this. They will defend it to the point that it becomes a money maker for them, right? And for us as well. So here's your single prints that came in. They kind of separated this value here. And then you see that they created basically a wall right here, which happens to be the high volume node here. And then you see some single prints coming up. And then here's another one here on the prior month, right? And that would have played a role, not necessarily now. It's already played out. There's a little bit of a single print right here, right? On the monthly, that's pretty decent, right? And you see where it's sitting right now. Sorry, I just went too far. So that's the highest node that we have right here since Skinny Belly 54. And I'm pretty sure we have some here. Because when we started that crazy selling, there's a lot of structures that we left behind. And if you look here, for instance, on the monthly, which ones would you guys look for? I'm just gonna zoom in a little bit. Anything you guys care about here?
I period and A period single prints.
Oh, there's a massive levels here that they're gonna be coming after, right? So in terms of price action, right? If they're to come back to this level right here, I'll be interested, right? This might be a level where you're interested a little bit in some, and I'm talking about super longer dated puts. But that would mean that they're rejecting the current value area high as well. So does this setup make sense? It is one of my favorite setups. So if you want it to be yours, it needs to make sense.
Yeah.
Okay. All right, moving on to Spike. If you don't understand Spike, this is my favorite, I would say, day-to-day trading setup. When I see it happen at the end, and you'll see me, are they gonna give us a spike, at 350 or so? Typically, let's say if the L period low would be set up for a spike or a spike up or down, high chance they're going to have a spike. And you can go ahead and test it. And what I mean by that is if you go and open the TPO here on the dailies.
You repeat that too.
Yeah, I'll repeat it. So if you look at the daily profile here, and you care for spikes on the daily profiles, right? You don't really care for, monthlies or whatnot. So if a spike period comes in, if the L period is a high or a low of the day, right? And M period's cracking that, that's a pretty good sign you're going to have a spike. If the L period holds the high or the low of the day, really high odds you're going to have a spike. The other day, I mentioned, let me see, there's a spike coming, and I think it was a 60 level. Just can't, I have to find which one.
So this is how you're like at 335, you're like spike incoming.
Yep, that's exactly based on, and I forgot what it was. I think it was like 60 level, 60, 25. I don't remember. I know it was.
How you would know.
It's just the odds of the market profile. So whenever they have, I don't know. I'm just playing what they've done before.
Yeah.
So I'm not gonna say I know it, but typically what they do. So let's say this was L period, right? Like the I period, but there's a really nice one here that we played. Don't know which one it was. I thought it was recent. I think Gator played it with me. Maybe it was. I forgot what day it was, but it went to 60 level. I just don't know what 60, right? That's all I have in my head is the 60. I don't know. But for instance, here's your, L period. When I say when you break the high or low of M period, with M period, you can typically catch some decent points. For instance, here, 216, and it went all the way to 23. For, if you like trading the last minutes, that's not bad, right? And see here, it was an outside period as well. And then you typically want to go in the direction of that break. And in this case was up, and they confirmed it the next day. They opened above it, right? And they continued. So let me find one that's actually important or relevant to our trading.
July 10th.
July 10th, thank you. Where were we? Much higher. All right, so let's look at July 10th. So the first thing I notice when I'm looking at like even posts like right now, like in my head, the first thing what do you guys think is the first thing I saw for July 10th?
Trading day.
The first thing my brain recognized was, man, that's a shitty IP. That was the first thing I noticed. And out of the narrow IBs tends to happen what?
Trend days.
Trend days. Excuse me. Sorry, guys. I just got coughed up really bad.
You're good.
So here's this. I mean, K period was the high, but I would think it's probably 2 TPOs below. And then this is your spike. This would be your spike base to the upside. So the K period for this day was the highest day. And I'm just going to add the ending day here, the blue line. So once you crack the K period in the last 30 minutes, this becomes your spike base. Okay, that means we spiked this level, and depending on open tomorrow, where we open, and if we auction below it, you're looking to turn what?
Bearish.
Bearish, right? And this is why would we mark the M high instead of the N high?
Because the end period is just settle price. It's after hours.
That's correct. Do not care for N period as in Nancy. You don't care for it. The only thing that comes good out of it is this called settle price. And settle price happens at 4:15 p.m. Eastern. And I typically mark this as settle price. And settle price, I'll just skip to a slide, is used for what?
Net long and net short.
Net long and net short is correct. So if we are trading after hours OVN above this level, what does that indicate about people that overnight?
Net long.
They are net long. The reason why I say that is if we're net long on overnight session, what they typically like to do, does anyone recall?
Rebalance down to the opposite way that they were net.
That's correct. They like to rebalance the inventory because if they know these people are long and they're like, oh crap, we need them out, well, how do they do it? Drop it, and then they're looking for longs again. Right, so usually the balancing period happens within the first hour. Just keep the side note. Within the A and B sessions, you're going to have balancing occur 90, probably 5% of the time. So now that this is our A and B period, right? When we opened, I would say that we opened right here. Where is this? We opened at 86 or so. We can maybe let me see if that works. Okay, so we opened right here. We opened where? Is this bullish or bearish?
It's neutral inside this spike.
Semi-bearish.
Okay. You want to explain that for others?
We're accepting the spike, but not extremely confidently. We're opening within the spike, so we're not rejecting it. As if we opened under, we'd be rejecting and it's bearish. But because we're opening inside it, we're accepting it. And so we're bullish, but we're not extremely confident in the acceptance as if we were to open above it entirely. So it's semi-bullish.
That is correct. Does that make sense to everyone?
Well said, Chance.
At the end of that B period, would you consider that to be more bearish since it's closing on below it, correct?
Say it again.
On the end of the B period, would you switch more to the bearish side since they closed under that spike?
Where would I turn bearish? I'm gonna let other people see if they know.
Are the retests of 76 from the bottom, top of C?
Yeah.
Yep.
This will be it. And why is that? I'm afraid to move the candle. Well, let's do it. Other one's showing 5 minutes. Okay, let me go find it.
Looks like there's a low volume node there too.
Okay, here we go. So here's your C period, right? So yeah, the A period, B extends down massively, right? And then, of course, I would check where's your volume, and you're checking to see, and this is a pretty good volume pickup, right? Double the volume, and they're selling. And then this is our spike base. Opening or auctioning below the spike indicates that this M period here is rejected, and most likely, where are you to go?
Opposite extreme.
Opposite extreme. And how wide was the value area? The first thing I noticed on July 20. What are the odds of 80% playing out here? I would say 100%. I mean, there's no question that they will not play it out, if that's fair to say. High odds are going to play this 80% here. So whatever the 80% was, maybe 10 points. This becomes almost like a sure 10 points, like thank you, 10 points. Okay.
Isn't
But
that also a poor low?
this one here, yeah.
Yeah.
This one was a poor low at this time, correct. They came
That
back
also-
and, yep, go ahead.
That also counts as an open test drive reversal, right?
That is correct. They open, test, and they proceeded. This is an open test drive.
Yeah,
Where would the
second
open
test-
rejection reverse be?
That second
Open
one.
reject reverse would be here if they proceeded here. If they cracked that, right? But they did not. So spike, does that make sense to everyone now? It's a pretty good setup to play. And the way I would play it is somebody already said it. This was our base. They came back for the retest from below. That was it's probably the best you're gonna see. Just being honest with you, this is the best you're gonna see it. They came back, beautiful retest on that, on the spike base, and then they continued lower. You know, this was your spike end. Them opening inside here indicates not the conviction you want if you're a bull. Them breaking below the base sets up a shit show, and most likely you're gonna go, you know, you can target the value area, the low here in this case, and then of course the low of the day would be the second because you had
Or low.
poor low. So now think about yourself and this is more of a psychological, right? If you, let's say this happened, right? And our base was it here? Yeah. How would you play this? This is good to know, like, hey, this is spike, but how would I play this? If I'm taking this short, let's say I'm taking this short on where's your stop loss?
I would try to look at footprints.
Okay, I mean, totally okay with that, but I don't have footprints. I only have this.
Settle price.
Okay. You mentioned something earlier, Chance, but I want you to think of that when you're trading. On framing and something about 50%.
Oh, the 50%. You could use the 50% of that A period.
If this would be the B period. So let's say
Oh, was it?
so let's say I do this and I'm shorting the retest. Could I play something like this? If you're
That's
able
so
to crack
good.
the 50%, that would be good. Then if you look at your settle price, which was somewhere around here, that's great too. Could you play this where you're risking, quite a bit here, 16 points, which I don't give them 16 points on ES, but if you guys do, that's great. If you're a longer time frame participant, you could do this, but your reward cannot be smaller than what you're risking. Then if you're targeting, let's say the low here or the gap fill, that's not bad, right? But you take this trade and you walk away and you come back to profits. Otherwise, you're gonna freak out. If you're more confident in what you're seeing, this is not necessarily the stop loss and what you're playing. I would probably look for this, right? There's two ways I would play this. If I look at this is definitely one way, because if they're able to claim the 50% of this, and that would mean that they reclaim the spike base, right? Then I would be in trouble with that short. That's two things, telling me that there's a high chance they're going to revert this and go back. But one thing that did work in your favor is once this B period came back and they cracked on your retest, I would say that was pretty good confirmation that you're going to have what?
Trend day with that C period.
Yeah. Remember when I talked about C period just like 30 minutes ago? There's a high chance we're going to continue lower, guys.
This is like a perfect example of how you always say wait for the retest.
This is it. This is your spike. This is your retest. And I would say 9 out of 10 times play this. I would take this, and I typically target the extremes when I'm giving points. And look at this. I mean, if you take this is risk to reward 4-1.
That's a beans trade too, right there.
Yeah, Bean will take these trades, both Beans, right? Mr. Bean, not Mr. Bean, Beans for life. And then Dino also takes some good trades. Burnside finally started taking trades like this. To take a trade like this, I would say it does not come overnight, but where it does come overnight is fucking size down. Do you guys remember when I took the 3 MES short up for June value area high and I said I'm closing a June value area low?
Yeah.
I closed at a June value area low. I was willing to lose $280 on my risk. But where I took it short, I had almost 3.5 points on a reward. So lose 280 or make a grand. Right? And if you can do that, and you don't have to, this is what kills me sometimes. When I'm not live, do you guys think I'm trading every time?
When you're not live?
Yeah.
I mean,
For sure, man. You're going crazy.
Not necessarily. There's days, like for instance, a week prior to this one, I made really good money. Do I have to trade this melt up?
no. You're waiting to see, like,
Do
you're
you
letting
need a little
them.
bit more data? Sometimes, when they're doing this, and there's a few traders that trade similarly. If you make big money one week or a month, sometimes it's not bad to take off the next week or next few days. If you make 10 grand on Friday, I promised you, you're better off not trading Monday. There's people in this Discord that I've known, maybe 5 years or before the Discord, and they made hundreds of $1,000s on AMC trades. And I personally sent them messages asking them to stop trading for a month or two. What do you think happens shortly after that?
They lose it all.
Yep.
It's because of your emotions, and it's nothing else but the emotions. And a lot of you guys that are starting, you want to match the profits of people that have been doing this for a very long time. And that's where the problem starts. You guys want to be something that you're not ready, nor is your account ready to handle. Just because I can go a 10 pack on ES doesn't give you the right to go a 10 pack on ES. My margin is $17,000, which would indicate that you have to have some money in your account to trade it. And especially if you're using the funded firms, the Apex, forgot the other one that you guys are starting to use, but I don't think they give you, $100,000 on the drawdowns to play with their money. And not do I take 100,000, but your account should be able to handle that size comfortably. It shouldn't handle 10 ticks and you're out of your account, right? Does this spike make sense?
Yeah, can I have just one question? I remember this day, I think maybe it was Dino and maybe even you, Shorty. You guys, I think, took the short way earlier. Like when B period broke, you broke out of the spike
Got
and
this
it came back in.
This one?
Where is the spike? Yeah, so
The
see,
spike is right here.
yeah, but the top of the whatever it's called, the top of the spike.
The end? Yep.
Yeah, the end. Because I remember seeing people talking about,
Under?
shorted 91 or 90, and I took this way like 73 or so, and like, oh shit, man, I left 20 points on the table here.
Yes, and I did take this short as well. And I remember taking the short. I think I got 91 and a quarter, and I can
Yeah,
check
that's
my log.
that's what I recall.
Once you see that, for instance, you have the A period opening range in this case, when you look at it, the range, 9 points, is not pretty wide for 30 minutes. That's telling me that this was all short-term traders trading. Then somebody tried to go in and pop above this level, right? I don't know if, and I'm just telling you the mindset. If you're trying to crack this level and then you lose below this spike that you had here, my idea is that if you went above it and you didn't like it and you immediately crack inside the A period or orb high, there's at least chance you're gonna go to the A low and then you can test to see what happens there, right? And here we are already good, maybe 10 points or so. But then there was no slowdown here, guys. There was zero slowdown on the B period. The next target below this is what? It was basically your spike base. Then they came back and then they sliced the spike and they came back for the retest, actually closed it. And I believe I took the same trade here that I'm kind of showing. And then they proceeded to have the sell-off and go on.
Yeah. Okay, makes sense then.
Yep. And what I pay attention to sometimes, this day here, if there's a trader out there that can make sense out of a profile that looks like this, he's full of shit. When you have a profile that looks like this, that's driven really by a bunch of single prints in below, right? So you have single prints that are sitting at F, a little bit of value being built here between K and G, but it's only like barely 4 or 5 periods wide. So there's a lot of concentration was being built here. This spike here, it's telling you it's irrelevant. Then what are you going to fix most likely and revisit is, remember when I say when you have like a sell-off or tight profiles like this, you want to pay attention to the value area of those days, like we have August 2nd. So you're coming back here, and most likely you're going to revisit that POC of that. And especially in this case, it was a VPOC. And that's exactly what they did. They came back and they visited that VPOC. They kind of came back to the lows of the value area low. And then obviously we traded in between for a while. And we're in a similar situation now, just a tad bit opposite, right? So we had the sell-off. And if you guys remember, this is the August 2nd that I'm referring to. Same idea, nothing really changed. We're closing inside of it right now, like right on the upper portion of it, and then just zoom in a little bit. I'm going to hide these candles. For intraday traders tomorrow, what's important? Do you see something?
And
They need to hold those single prints, right? That they divided the value with.
Well, here, this was just a liquidation profile. This is a massive lowercase b profile. And in this case, right, they need to reject this value quick. Is there a high chance as we auction tomorrow, let's say it happens, that we can find any aggressive sellers in this? Somebody asked about this. That's why I'm touching it. In this single print zone here, how would you find where they are? Nesty, I think it was Nesty or somebody who asked.
Footprints.
Yeah, footprints is one way of finding them, right? We know that there's a little bit of DB period highs sitting at 96, 70 and some here, right? But I would rely necessarily on footprints to see if there's an imbalance that they left behind when they're selling off. And what an imbalance would indicate is that aggressive sellers added, to their positions and they started selling more. It's a similar setup opposite what we had earlier, right? And as of right now, when I'm looking at this, the only one that has a pretty tight value area is what? And the range, it seems to be this day here. Is the final day that we just had. And I'm talking about relative to prior days, 62 points. In normal days, we would all be happy to see 60 points. What they've been giving us lately is 100 points or more, 160, I think, one day. Okay, so now that you're suppressing and you have a little bit of access on the top, right? And you have a little bit of access on the bottom and you close inside the value area. Not necessarily the most bullish thing to see, but not necessarily bearish either. The value area shifted. If they could have closed above 75, that would have been good. And when this happened here, I don't know if you guys were on or not. I said, I'm looking, as soon as they go above it and they lose this level, I'm looking for what? I was looking for longer dated puts. What would confirm my bias for longer dated puts? Think carefully. What level would confirm it? If it happens, we celebrate because those puts could.
Like 343.
Exactly.
Break
This
that
level
IB.
here. You break this right here where you had the value before. And if you get rejected out of this value, we are putting in a new low. We're going to break the low that we just had, the 51, whatever, 40, 20-ish ETH. We're going to break that low.
Do you have single prints at 52.95?
52.95.
On Thursday, August 8th?
Let me check.
That could possibly.
I have them. They're a little bit higher. They're at 306.
Yeah, that's on the 30-minute that I've got them at the 52.
Yep. 306, yep. That's what I don't know if you guys recall, if you go back and watch the video, I said if you lose 306, remember what we said earlier?
You filled the gap?
Well, most likely you go here, you target this, and then you have a little bit of gap to play with, yeah.
So would you trim there at 306 then, or would you?
If they lose 306, that's really bearish for them.
Okay.
Because if you look on prior days, like Wednesday, what does Wednesday have that interests you? Do you guys see it?
Print double.
Single print at the bottom.
What about single prints right in the middle?
Yeah, in the middle too.
Be the double distribution too.
Yep. So I mean, it's a nice double distribution. There was also, if you look up the building of this, what we are. So you had a massive access high that, went here with the poor high, which we covered. They fixed that poor high. They built the value higher. Then they have, I would say, an outside day here with the major value area overlapping, but value area low matches, right? So that level became fairly important. And now, you have the value area high of that massive day, which matches the POC, the value area high, and a few levels above. But right now, if you're not able to hold this distribution on the top, most likely you're going to come back to the revisit of this single print here, right? So if they come back to this level, based on what we just talked about, what could you expect to see here? This could be a nice division of what?
Division value.
Yeah. So, a confirmation for the bears. If they really want to slice this lower and, give us a gift, they will eventually need to crack this level, and then, they will go all the way here. This would be the ideal spot for them to crack. But this profile is concerning at the top here a little bit. Compared to the other days, this is a pretty suppressed profile, and the volume is not nearly as high. Okay, so spike makes sense. Is there anyone that's confused? Spikes are important. It's the last letter that you're looking for spike. And I give you examples in the profile here. Is there any questions on spikes? I'm giving you the spike L. This is this base in the bullish. The end of the M is the end. Opening within a spike, meaning base end and base spike, that's semi-bullish. Opening above on the bullish spike is good. And opening below the spike is bearish because you're rejecting that spike. And ultimately you would, I would say, target you can target the value area high, the POC, but ideally you're going to go to the value area low of that prior day.
Shorty,
Go ahead. Would you say that? Sorry.
You can go. Go ahead.
Okay. Would you say that an inside L period would be any more probable of a spike on the following M period? Does that make sense?
No. What do you mean?
If we have an inside period on the
on L?
On L, yeah.
Yeah, yeah, of course. Yeah, yeah.
More probable? Okay.
Yeah, yeah, of course.
Okay.
All the time.
And then spikes only happen within the last 30 minutes of the day?
Only the M period doesn't marry. That's
M period, okay.
That's the only one you care for because it's the only period you have. Market profile is all about validation of prices and acceptance, right? And if you can't validate the M period because there's no more time, then the A period tomorrow validates it. If the trend is going to continue with the spike or not.
Got it. Thank you.
Okay, so here's the spike kind of that we talked about. So this is a different example. Again, I'm giving you, the base and then the end. And we open above the spike indicating acceptance of the period, right? And then they came back to this, right, zone. That typically is also a good, as long as they spend a lot of time here, that can be a good buy zone. And you can catch a few points off of that as well. If days prior, let's say you see this bike space is not erased by any of the profiles, I carry that base spike. Sometimes you will hear me mention a spike that occurred, but we never revisited for a few days. I carry the spike forward. Does everybody understand what I mean by that?
Yeah, it's still in play, basically.
That's still in play, that I count it, okay? And even in this scenario here, I don't know what day this is, I guess Thursday, May 9th. You see, this was our kind of spike base. They closed, open below it here, and then they pushed it, right? And then they closed. And then the next day, right here, they opened below it, and then they sent it higher. So they set up a nice little trap here. and then they proceeded higher. So this long here, once they reclaim it, when they opened and then they reclaimed it, that's actually not a bad long. It's your highest reward long with a little bit more risk, but your reward is also pretty good. That makes sense here. So what I'm talking about is if this line continues and this line continues, and what day is this? Wednesday. So you see we spent a ton of time here and gave a retest and we closed above it. And the next day, right, we had a gap down, they opened below and they reclaim, and look what they did here. And just based on profile here, I would target this section for a reason.
They even have a, would you consider that Wednesday like a pretty big poor high from Wednesday? 3 periods
This one
there?
here, yeah, of course, yeah. This is a massive one with a compressed profile. This is a balancing day.
Get in on Friday there of the hold of the spike.
Right.
Or
And
Thursday,
then you
sorry.
see here, if you took this, right? If you took this trade, you could have, you know, targeted first this one, and then this one here is also a poor high.
Why is that a poor high? Because they're within 1 TPO of each other?
Yeah, yeah, this is definitely a poor high. This is 1 TPO on the top. So this one. Does that make sense to everyone? Or
Yeah, and obviously the more TPO periods that are stacked at a poor high, it's a
oh yeah,
strong magnet, right?
if you're creating a ledge, like we've had a ledge recently somewhere, I think it was a monthly profile that we built a ledge and we cleaned it up. The more you have, right, the more powerful that is.
Like if you have a poor low and a poor high in the same session, whichever one has more periods would be the more probable magnet, you would say?
For the day, but that seeing a poor high and poor low like that is you're typically not going to have the range if that happens.
Okay.
They're going to be oscillating and they're going to be right in the middle, and that leads to a lot of sideways stuff.
Mm-hmm.
That's pretty rare, just so FYI. So if you look at the monthlies, like monthly profiles, sometimes you'll print these massive, for instance, failures. So for instance, look at this one here.
Yeah, that's big.
I mean, this is a massive poor high on the monthlies, right? You're talking about quite a few periods. 1 TPO indicates a failed auction, and then you see, right? They actually broke through that, right? Nice little crack, and then proceeded much higher. I thought there was a really bad poor low that we were watching here as well somewhere. I know there's one that's pretty massive. I forgot which one. I don't know where is it, but there's a massive somewhere. I'll find it, post it. Okay, let's see. So we covered a spike. Is everybody comfortable with spike? That's new. And even if you're not new, are you comfortable with spike and what it means and how to play it, how to identify it?
Yep.
Yeah.
Okay. Next one is initial balance extension. Like I said, this is not my favorite, but I do prefer to play it on the retests. And they've been giving you, I would say lately, I think the retests on IBs have been decent. And I will bring up a few because I know I played a few. I think NQ had some recently as well that we took, and they were nice. Let me see.
I feel like the retest will chop you up. Get caught up in the chop a lot of times.
Yeah.
For me, yeah.
Typically, if the C period is the one causing the break on the extension and not like a G or H period later in the day, it carries more confidence, and I typically take those. If it's early period, taking it out. Let's see. So here's, for instance, I think this is A and B period here, and here's the C period. It never really cracked. It stayed inside. and then you see the, you know, the E, F, and G periods cracked higher, I don't put the same, you know, value as if the C period is cracking this. So for instance, you see this one here. This one is the C period break here. So it's cracking, and this was the IB, and then on a retest of this would be a good long, and then you would have to kind of look at your candles and what you're playing. This is B. I think we're on this one. Where was it? Day. Lost it. Oh, right here. So on a C period like this, if they're re-breaking and you're coming back for the retest, you can play that. And it's not my favorite setup. Like I'm telling you, this is not something I look for and trust it a lot. Because it, like you said, it can chop you up, but it's not my go-to. Is there instances where it works? Well, here's this one. You have A, B, C, D, and then you crack an E. You're giving the retest in the F period, so you built a lot of value, and then you're cracking below it. Ideally, you know, you could take this, but the best reset would be come back again and give you a longer retest. And you see they kind of chopped you again, and even on the next day, they reclaimed it and they went. You can play them, but this is not something that you should just take and contextually alone. I'm retesting IBH, I'm going long off of that alone. And I would say that's not going to yield a lot of results. It's important to know where that level is because the sentiment in the auction changes once you reclaim IBH and IBL levels, but it's not the setup that I would necessarily make a living off of here. It's important to know when the extensions happen, and why do you guys think that is?
Show the, I'm guessing their plan for the day, their intentions.
Yeah, so usually the IB is extended by who?
The other time frame participants.
Yeah, so if there's no IB extensions, then we know what kind of day would you have. Just a normal or a sideways day, right? You will not really have much going on because that's all short-term traders or participants. Once the IB is broke, that's other time frame stepping in, trying to extend the price above or below the level. That's why it's significant to know where that is. And then, you know, days of narrow initial balance, I would say that you guys have to pay attention to that. When an IB is really tight, it really means that there's a higher chance of an explosion or breaking that IB and going higher. When it's wide, as we've had them lately, if you have a really wide initial balance and they're still able to crack it and continue like with the framing down, that can cause some major selling, guys, like, or buying, whatever the case is. Typically, you don't break 3x of an IB in a day. Just keep that in mind. And even on the sell-off that we had, we did not crack that level. It's a big level to have 3 times the extension. So initial balance wide. So typically when you have an initial balance, and until last week, initial balance was averaging about 25 points on ES. If you have a wide initial balance, like let's say in this case, it was narrow, right? And you're able to, let's say, reclaim some of the key levels, whether it's value area low and it was a poor day, you crack below it and you reclaim it, you're looking to see who's stepping in. You care to know who are the participants coming in on a tight, you know, initial balance prior. You lost it, which is normal. You're normal to lose narrow IB. Once they reclaim that and then they cracked above it, most of the time you're gonna, you know, start some kind of rally where the sellers are helping propagate all the buying as well. And here I kind of read out and give you the examples on how you can play it and give you all the stuff that you have to look out for as well. Okay. Poor high, is anyone not clear on poor high? I think we beat this one to death.
Are you gonna go over a little bit of with the standard deviations
On a poor high?
No, just in general. Like I still get a little confused on like first sig.
Yeah, we'll cover that. I mean, that's a
Okay.
different topic, right? But yeah.
Yeah.
So on the poor high and poor low, all it means is that there's unfinished business and that they're most likely gonna fix that, right? And the probabilities of fixing the poor highs and poor lows matter in terms of trend day versus bracketed days. If you have a D shape and you have a poor high or poor low, your odds are probably twice as high as if it was a, let's say, a trend day. Because usually on a typical days, normal days, your range is not as high. So the retest and fixing of those poor highs and poor lows increases. Okay. So during the day, let's say we had a profile like this, and we're coming and we have massive access on the bottom on an A period, and we're coming back and they peak above, let's say like they did here, and they bring it back, let's say to value area low of that day, that becomes a very good long, and you're targeting to fix the poor high of the day. Okay. Does that make sense?
Yep.
And believe it or not, this happens, right? And it's a really, really good setup intraday as well. And sometimes I watch even the periods themselves. I will keep an eye and see, is there any poor highs and poor lows between the periods? Sometimes you guys will hear me say I see a poor high between the two periods or poor lows. They usually come back and they will at least tap the level low. Then if they crack it, for instance, then it changes, right? That changes what we're seeing and the auction. Let me see if I find. So for instance, here, you guys see this, this is not the cleanest poor high, but in terms of structure, it looks like B period had left a poor high. Let me see, this one definitely looks like it. You guys see this one here? This is July 26th. Yeah, there it goes. If you look at this, right? So we have a poor low and poor high, right? So here's your poor low, and then you have a poor high here. And what that means is really lack of confidence on what? And actually both the buyers and the sellers. I'm just gonna put a little circle here so I know what day it is. And now if you come back here and look how they played it, right? The next day they stayed within the inside day. The day after that, they just literally tapped the high of that. But what did they clean up? They
Poor
cleaned up
low.
the poor low, right? Then ultimately, once they clean up the poor low, and let's say, how could you play this? Well, if you build a profile to see, what is the context that the market's telling you? So if I merge this one with the previous profile just to see what the market has, you can merge this profile to know where are the extremes and where could you potentially go for long, right? So if I merge this one now, this will give you a good indication where is the value area low for this and where can we expect the extremes to kind of start helping us to look for longs, right? So I merged a couple of days right here. Now look what happens, right? So let's say you're looking to go long from 478 on a reclaim of it. I don't know when that happens, right? So they came back here. Well, you couldn't have played it. They gapped over it. So they gapped over, but if that wasn't happening, right? If they did this, there's a high chance you could target this, which is the poor high here of 4 days now. And what they did, they perfectly gapped, used it as a retest. But once they lost this, I would say you had some ideas of what you could target for the downside. Does anyone see what you could have targeted? Once they lost this level after the gap, what could you have targeted? They lost the level where they gapped, and which was our prior breakout level. We're in
The
a similar.
extreme.
Who sees it?
I see it.
I don't see it. Anything else you guys could have targeted? Let's go through all your targets. You crack this level. What's the first level that you're watching here now?
POC,
Okay, POC, boom, 1. What's the
then
next?
value area low,
Boom, okay. What's the
and then
final one?
the poor low, bottom.
Which poor low?
What is it, the 24th down there?
Yeah, exactly. This is most likely what they're interested in to fix, and they definitely fixed it, following with the gap on the August 2nd, which is where we're stuck. Okay, so that covers that concept of poor highs and poor lows. Okay, I'll add something because somebody asked here. So typically when I look at the balances and when I prepare for my day and trading, I zoom out and I start with monthly. Sometimes, if you have these massive drops or runs, you can look at quarterlies or higher, right? But if you look, for instance, on the monthly profile here, the balance that we had here on monthlies is where? Where do you see balance here? I would say from this month, March, all the way to about, what is this, May? Great. This was a nice little box right here. You guys agree with that?
Yes.
Yeah.
Yep.
Okay. So what I like to do is I like to grab the fixed volume profile. You can also merge the TPO if you want, right? It wouldn't take much. You could just click this and then click this, and here you have the SIGs of the TPO, right? So your first SIG, which means, are you guys familiar what SIGs mean? Is there anyone that doesn't? Standard deviations, if you took any math classes and statistics, you would have a bell curve, right? And your bell curve looks like something like this. And your mean is here, then you have the first standard deviation here, you have second and a third, right? So your first standard deviation, right, is the 68% of the volume, which is 34 and 1, and 34 and 1, which is here, 34, 1, 34, 1, and then you have the 16s or 14 fives. Does that make sense? That's what we're after. We're trying to find the value area of the first 3 months that they're looking here. So we went inside that bracket, which was 85 level that we are stuck in now again, or 86 level, whatever it was, 85. So, but the first standard deviation of the 3 months is showing to be at 46. And the second one is showing up to be at 135. At these levels, what are you expecting to see? Anyone want to take a wild guess?
Other time frame participants.
You're expecting to see other time frame participants come in. And I believe I had these levels marked and I posted them in Shorty's corner before it happened. But the importance of this is to find where they might show up on the extremes. So they showed up on the bottom extreme. Do you guys remember telling me that we might go to 53.48 rather quickly? I don't know if you guys.
Yeah.
Yep. If you guys read the Shorty's corner, it was in there. That there was a high chance that they're going to go and probably visit that level in a short period of time. And that's exactly kind of what they did. They came back because they're playing between the extremes of the 3 months bracket. This is the bracket that we had, not necessarily the whole thing, but let's see. This right here was your bracket, right? Right here. This is your bracket for the 3 months, and they came back to the extremes of it. They came to this, and now they're above here. That's what I mean by first SIG. And then you can also change this. I have it set up on my volume profile. Let's say I do this with, I'm just going to hide them at least for a moment. I do have a volume profile, right? That would be the same levels that, slightly different here, maybe 42, and then you have this 46. The way I change these settings is based on input. So 68% is our first standard deviation. 95 would be our second standard deviation, right? Probably the top's not going to change much. The bottom is. Here's the second standard deviation. So if they're to lose that next time, high odds that they're going to be going towards this level here. And then the third one, which encompasses 99% of the volume, is going to be a little bit lower, and that's sitting at 5,009. So that's how I find standard deviations on my charts and what they mean. Typically, if you go between second and third deviation here, it becomes a really good opportunity for buying, especially if you lose and reclaim. This is a go ahead. Does that help? Whoever asked, Chance was, I don't know if it was you.
Yeah, thank you. And you like FRVP for it over market
Yeah,
profile?
yeah,
That's
I
another
do.
thing I get a little confused about is I understand it more now, but I would think that the way I've been doing it for my value areas, like when I mark them out for the day, is I usually use the volume POC, the VPOC.
They won't be different much, man. I'm telling you. Here, I'll go on
So,
RTH here.
sometimes though, like I don't know, they're like 4 or 5 points different, which I guess isn't a lot, but
But it's not in the bigger scheme of things,
yeah,
right? So if you
yeah.
look at this, for instance, here's your value area high. You just want to make sure that your stuff matches here. And then when you look at the TPO, for instance, your value area high. So look, for this day and this day are matching here to a penny, right? Your
Where I would
value
get
area,
confused is the fifth right there on the left.
the fifth,
Right
this one
there.
here.
Yeah,
Yep.
that's like where I would be a little, but I mean, on like the value area high, I guess it's like
Yeah,
not
so
that
41
significant,
to
but
52, it's big, right? But I wouldn't initiate necessarily trades here on the first tap. This
yeah.
becomes like a zone that you're watching, right? You know, you want to see it reject and then fall below this to give you confirmation to go, for instance,
So
to
you
the
will use
value.
it as more of a bit of a zone.
Yeah, of course, yeah.
Okay.
I mean, this is, look what happens here. They dip
Yeah.
below, they reclaim the zone, they go higher. You can definitely do that. I wouldn't stress too much of it. And look here, here's a zone that's being set up, and look what they did the day after on August 8th. Thursday, they came back to this because this was a, remember we said it was a 3-day balance
Yeah.
we're watching here. So it was a 3-day balance and they came back pretty much right in between those values. And the first sig is right a penny below, and then they exploited higher. And now we are, you know, in a 4-day balance, if you want to call it, and we are at the first sig and we close below it. And the first sig matches the Friday's value area high. So bears don't have a lot of room for error, but if they lose this value area low of Friday, which happens to be the 4-day POC, which happens to be the yearly POC,
Yeah, big.
this level comes in surprisingly fast here at 22. So it would be something like that. That's if they lose it, right? Okay, so that's poor high business. Tips, short-term trades are typically taking trades around these levels. So everyone that's watching this, because it does carry intraday high probability, and the following day, especially if that day that you close with the poor high is a neutral day, or let's say a D shape, it really, really is good for a setup. Crowded poor highs or poor lows. Do you guys know what this means?
No.
So I've mentioned it a few times, maybe a different verbiage, right? So when you have a high or a low that's crowded, meaning that there's a lot of price action happening, let's see, at the highs or lows of that day, typically they will auction away from it, right? And meaning if the market has, let's say this is the top, and they're trading like this, well, what do you think the market or participants are doing here? Retail.
Accumulating.
Well, they're shorting.
Shorting.
That's typical behavior of a retail trader is that they're going to short at a poor location. When you short a poor location, the easiest way for them to capture your money is here, right? It's a delivery of pain and they will crack it and they will proceed higher. So that's what that means here. If you're getting a poor low that has a lot of price action there, but failing to make lower lows, this is called shorting a hole in most cases. The more crowded the poor high or low, more the odds of poor high low being revisited in short term. So they bounce it and then they revisit it. But first they get you out because you're short at the wrong spot or long at the wrong spot. Does that make sense? Like logically why they would do it?
Yep.
Yeah, that makes sense. Thank you.
Because they want to get you out of position, and then you say, "Oh crap! Only if I would have stayed."
Yeah, I've been there.
Yeah, we've all been there. Trust me. Okay. Poor high low failed auction. So I'm giving you a few examples here. Necessarily, I have to go through this, but is there anyone that's not comfortable identifying them? Okay. Trading inventory. So what I mean by this is the settle price is how you gauge it, right? If we close at a level, right, just like we did on Friday, and we can see, what happens today, Sunday, I believe. We can see what happens when we open at 6 o'clock. So if this is our settle price, which is sitting right here, and we can mark this up for actually trading. So if this is our settle price, if let's say we open tonight at 6 o'clock and we're going away, and let's say we come in at 9:30 and we're somewhere at 5,400. Well, that would mean the inventory overnight is not long. There's usually, a comeback period within first hour of trading. You find the level, and most of the time they will look to rebalance that inventory because inventory was not long. They want to make sure you guys are out and they close, and then the inventory gets balanced, right? There's not a lot of inventory at top, perfect amount here. They will sell off this and they'll start buying it back up if that's the case. And if you're opening below the settle price, it's said to be the inventory is net short. And how do you, screw the net short? Just like I showed, if you have a, congested poor low, what they like to do is they like to go out of it. So if they go below it when they can't make lower lows, well, they're most likely going to drive it. And typically what I look for on like rebalancing days like this is I want to see that poor high or like, crowded high being set up for them to rebalance it down. And same for crowded low.
What would you consider them setting it up?
Meaning that you see, let's say we open on, let's say tomorrow at 6 o'clock, we open and we are setting up like right at the access high here that's sitting. And a bunch of candles are hitting here, but we're not making higher highs. That typically indicates that there's potentially a spike here, and that forms, I would say, a little bit of access. And once they lose that level, that you're gonna visit that rebalancing
So they'll like
level.
spike it up potentially, and then
Yeah,
lose it
exactly.
right away.
Yeah, they lose it immediately. They don't spend a lot of time there because there's not a lot of price facilitation. Then they come back and they facilitate the price to go to the rebalancing level, in this case, 67. And I believe our June value area low is 66.
Just from watching the way you trade, you always let them do that and then get in.
That's correct. That's something from Wyckoff theory, right? It's about balance and efforts, and the results. So for instance, here, right? This is perfect what they did here, right? They created a nice little balance, right? And they spiked it here on this day, and then they came back for the retest. Most of the time, what they do intraday, right, on smaller results. Let me see if I can find it. Okay, yeah, here it goes. Okay, here, what do you guys see? So see, you have a nice little high, and I would say you have a nice little short here on the bottom, right? So you have one tap, you have a nice box setup, right? And here's a peak above, right? They trapped a lot of longs, right? And then even if, let's say you don't have any more information, you schedule this low to be the low of this and this high here. So look how that looks. They peak above it, and then inside of it, there's multiple, I would say, congestive setups here. So they go inside of it, they crack above, they trapped all the longs, and that's something I would look for tomorrow as well. As identical setup. Once they do this, you can definitely take a short, and you're looking for a potential sell-off. And then they came back. Typically, they come back, guys, on these reboxes. They gave you a nice retest here, right? And then you can kind of build up on it and see what else did they do in terms of like consolidation and retest as well. So here's this one here, and I don't know if we retested it or not, but this is a decent box where they accumulated. There was a lot of shorts here, So if you guys look here, if this was, let's say this level was the short, look what they did here. Are you guys able to visualize it? Like with the box? So they created a box, they created a low, they tapped 2 times. A lots of people got screwed here. So this is called a crowded low, right? I mean, obviously you're, selling here. You went high. This is our August 2nd with that excess at 89 or wherever it was, somewhere here. Yeah, right here. This is our access level, and they're coming here. And what can you expect in this range? You're gonna expect some protection from these guys that caused this massive single print, and then they trapped everyone. And look what they did. I mean, they sent it much higher, and they do that a lot. And I'm telling you, you could do this on 1-minute candles. It works the same way. It's just that I would say your speed and how you execute might have to vary a little bit. Here's another one. If I can draw. I wouldn't recommend 1 minute, but for you guys, whatever fits your boat. So for instance, look at this. First 2 taps, I wouldn't know about these. 1, 2, tap, tap, and look what they did. They trap all the shorts here, and then they continued higher. And then on the opposite side, just how volatile the market's been lately, it's kind of fun. Look at this. They sell off, and look what they did to these guys. They said, hey, we're gonna go higher, and they said, okay, thanks. Lower.
82 and 85 were single print levels too from the gap down.
5382.
Yeah, 5382 and 5385. I think it was B period from like August 2nd or a week ago.
Okay.
I think,
Yeah, there's a single print there.
August 2nd, yeah.
Yeah, I took that short Friday.
You're talking about this one here.
Played out nice.
Yeah, there's some single prints in there.
Yeah.
That's
literally
right
the levels to the T.
Yeah. Hey, Shorty. So,
sure.
Poor lows and poor highs. They also cannot be cleaned up on an ETH, right?
That's correct. You want the same participants, same style, same type, same money to be there to fix it. I don't count it, ever.
Okay. Just making sure they were the same as the single prints.
That's correct.
Okay.
And this would be your gap, right? This is your gap start. And I would mark these up, just FYI. And then you want to see where this gap goes. And it goes all the way here. So now I'm just preparing to see my levels and marking the levels. So some of you guys asked, how do we know what to mark? Well, here you go. So I'm preparing my basically analysis for tomorrow. So I know about this level. And if I was you guys, I would, leave a box here. Like put this box and maybe shade it whatever color is comfortable for you. If they can find acceptance above this level here, I would say 86 is my level that I'm watching. We'll get to it in a second. I think I beat it to death moments ago. Right, I'm watching for this, RTH there. I'm watching for this 86 level, wherever that was. I think it was somewhere here. 80, what is this? Let's see. I'm trying to tag this level right here. Okay, call it 86. 86.25. It's an important level. Does everybody know why? I think I've covered enough where you guys should be able to answer.
Value split.
Let's see. Close, right? So it's very close. So here's our monthly, profiles. So this was the top of the balance. This was our balance before a breakout right here, right? So if this is our balance, that means there's a high chance if we're able to crack that 67, that we would be looking to see, to go higher, right? And that was here. So 67 was the high of this month. And then you see that there's a little bit right there. 86. So I'd watch to see what are we able to do here on the highs of 86.25. If we're able to crack that, then we have the open space pretty much to the gap, and I would ultimately target they're going to hit this 4444, and this would be a pretty freaking good spot to, monitor what they do, and there's a potential for, longer data puts, because then they would be targeting the entrance inside of this value area here. Right here. Okay. So that's why 86 is important for me, 86.25. Does that make sense?
Yeah, could you just
And
go over what type of confirmation you would look at if they do explore to fill this gap a little bit? Like,
so tomorrow, if they're able to, depend on where we open, I would say if we, let's say, open above 86.25 and we go higher, and this would be a good retest for long, in my opinion. But they would need to go, let's say, crack, at least come to 409 and bring it back to this level. That'd be a good long. If they can spend time here, that's usually what you're looking for. If you go above and you lose it immediately, that's a loss on your trade setup here, but that's indicating you quickly that you should shift your sentiment that this value here is being rejected.
very too
Right,
short.
and most likely you want to switch your bias for the short. They can always catch me on a trade wrong, but as soon as I see that they are rejecting the level that I had as a long, then my sentiment shifts with the market, that I'm no longer bullish bias, and I'm not bullish bias yet, that I'm looking for potential opposite, right? So I need them to spend time, and then once they give a spike and a retest, that would be a good long. A peak above like this and losing it is not acceptance.
Sounds good.
Okay. And then the next thing that I do, monthlies right now, you want to be aware of the value areas for June. I think it's 66. Okay, so this is, I was right. So this is your June value area low. And I usually mark levels that are accordance to the price and, where we stand, right? So I'll give you an example of what I mean by that. If, me marking a level here for April value area low, I can, if I'm not going to be deleting these charts, and I can put this April value area high, but how important is this level right now for me?
Not.
It's not relevant at all, guys. It's not very important. What I could do, and that's what I did earlier, is I can grab this, right, the 3-month POC or the prior balance, and find those first 6, which happen to be sitting here and there, and that's a more important level that I would watch for than, April. So now that I have June value area low, I can find out where the July is, right? That would be an important level to know. So when I look at July, this was the value area high, pretty much at all-time highs, and you can mark that, right? And not just a level for me. What do you guys think I formulate when these levels are crossed? Well, I formulate if the price is being accepted or not, and I can tell the range where this is potentially going. So now if you look, just pay attention to this. So your June POC, and as you guys know, I draw a typical box here. Now you see, even if I was to draw June to current, why this level is fairly important. Right here. Why is this range important? Like this zone right here.
POC of the previous balance.
Yeah, POC of the previous balance, just like we had a POC of this prior balance sitting here at 52.45, which is a pretty big level, and I would mark that, right? So even if you, for instance, let's say I take this FVP, I am in February, let's say I take June completely. So year to date profile right here. Then click that, click extend. And where's my, year to date POC? It's sitting right here, right? So my year to date POC is sitting in this section here. Let me make sure that this is 68 because it looks a little off. And my year to date value area high is sitting, for me, it's sitting right here. Let's just enable this so I can match it. So year to date value area high for me is right here at right where I guess we're waiting for it to see what happens. So this is a, you know, when you think about levels, I would say that's a pretty fucking big level, guys. You have your year to date value area high, you know, we had some little bit of access, not the biggest access we could have had considering the level. If they peak above this and fail tomorrow, is there a chance that I would take short below 82 here? Very high chance I would take below that, right? If we crack that, that would mean that Friday's level that we identified in yellow would be solid short. I would most likely target all the way to 53.45. Is there a level in between that we could take profits off? Yes, of course, but my ultimate goal would be to see this play out with at least a runner from 82 to 48. Okay. So far, everybody following?
Yeah.
Okay. So those are the big levels that I identified, right? Now what I do is I'll look at the weekly profile and I'll just hide a bunch of these so I can actually see what's happening. So let's say I go on my TPO 1 week and I would make sure I'm on RTH, and you know, you can, for all purposes, hide drawings, and you can kind of look. Your value area high for the week is sitting at right at June value area low. So you don't necessarily have to add a level. If you can't remember it, you can modify the text, but I can typically remember what this is. And then your value area low for the weekly sitting at 52.50, slightly above year-to-date POC. So if we're to fail here, right? If we go above and fail, ultimately,
Okay, there's free.
I'm
Probably need 2
targeting
gallons of
to
that.
see something.
So let me. So it's going to be the foundation. Okay.
I would be targeting something like this, right? If they're to lose this 53.41 level here, why do you guys think that would play a role at all?
They're breaking the POC.
Yeah, this is your weekly POC. I mean, this is, I would say this is a big level, right? If you're breaking the fair price of last week, there's a high chance that, you know, we get this play, and there's a lot of poor structures here, guys. I mean, this is just poor structures altogether here. Look.
Plus the previous day is at 43, no?
So,
another.
So this becomes highly doable, right? For us to start, you know, we are framing down on the weeklies. If you guys look here, so here's your framing. This is your, I think this one is, let me just split it. There should be a profile here. So a prior profile had the lows here that was sitting at 53.30. We continued with this profile down. If they want to stop the framing on the weekly framing down, what do they need to go above?
Previous week
high, which would be sitting right here. This level would be previous week high. Okay, so if they want to stop the framing on a weekly, they have to go there. They obviously stopped it on a daily since August 5th. We've been going higher, but they haven't done that on a weekly. And then on the monthly, if you guys go, you know, your prior candle here on, they have to reclaim, you know, they want to go here 54.36, whatever that, 54.33. So if you go there, I'm pretty sure we have some levels in that area of 54 something. We have that gap, and that'll be the, you know, the end of the 54.33 is a prior month end low. So
Is it just me, or did the year-to-date POC shift by 150 points within like a week? It used to be 5101, didn't it?
The POC?
The year-to-date POC.
Year-to-date? No, mine didn't shift that much.
Oh, I thought it was 5101 for some reason. Like
Not
a week
mine.
ago.
I think you had something off.
I guess so.
Yeah, so I'm looking at it. I mean, you could go and test it, but I don't think it one day would have shifted it, to be honest. Yeah. Mine's always been here.
Gotcha. Okay.
I would say that when you go on a daily here, your value area high is sitting at 20 versus 4 hours. I think it was a little bit less. Yeah, 4 hours is 86. I think that's the only difference that I noticed on daily versus this one here. So that's about it. Okay.
Gotcha.
And then the last thing I check is I mark these levels. Sometimes you will see me marking, the value area highs, PVs, and lows. That's typically, for me, what I use that for is instead of one chart, I typically have no TPOs and only candles. In a wider chart, I'll have TPOs with no candles. So I can see where's the price. And I mark these levels so I know where are we opening in the relationship to the prior day. If we're opening above value, right, on the prior day, let's say we open above 71 tonight, or tomorrow morning at 9:30 we open above 71, that means we're rejecting this value, and we are looking for new bulls to drive the price higher. If the new bulls are, let's say they go to this axis, they peak 89 and they fail, well then I'll look at these levels and I'm like, okay, well, if this is previous day value area high, now if you get inside of this, it sets up the 80% rule, right? And that's why I mark those daily levels, so I don't have to kind of turn on and switch too much. I mark the levels so I know
Would
where's the
you
value.
would you mark that I think 97 is the start of the untested single prints from the gap down or the
Yes.
move
Yeah.
down?
Yeah, I think it's a little higher. I think it's right here,
Oh,
470.
I meant yeah, I guess I meant the end, like the start from the bottom, like coming up into it. If you
So
have the
there's
top of
one
it.
here, yeah, 44. Right
Well, like
here,
if you look at 97, well, you wouldn't
97.
mark 97 at all, maybe?
I don't see, where is it? This one?
Yep, 97. It's right. It's like it it would be where the single prints start
Oh, the single
coming up
print.
from the
So sorry,
bottom.
I thought you
Yeah.
said gap. I was like, no, I
Oh
don't.
no, my bad, my bad.
Yeah, this, yes, of course. Yeah, I would
Okay.
mark this correct. And you had a little bit here, if you remember, this was the B period on that day, and they went all the way here to the axis low. So I had this marked, but I'm aware of this. I think it was B period. Yeah, B period here. That was 97. Yep. And
Would you
typically for
maybe
me, these dotted lines mean, and I usually make them like purple. Those mean single prints for me, color coding wise.
I know you mentioned you do. Are you specifically going to check tonight from like 97 to 17? Are you going to take a look at the footprints from that day?
Yes.
See if there's anything. Okay.
Yes. And I typically like to do that when everybody's asleep, to be honest, just the way I've been programmed to do it. So I can
Gotcha.
focus in and family, kids are gone. Okay. I think that covers the inventory. This is the type of days that we talked about, right? I think it's important that you guys are able to distinguish what type of day we had prior day. What is the chance of, today's day, right? If you had a normal day and you had, let's say on a normal day, you do expect a wider balance that is not broken. But let's say you have a neutral day where you have extensions in the C period on both sides and we close in the B. Well, the next day, let's say the range of that day is probably not going to exceed the next day, even if we have a breakout. So something I would watch for right between the days, especially double distribution days. Where do we fall? Where do we close on those type of days? Do you close between the HVNs? Do you reclaim them the next day? Those are important things to pay attention. Then normal trend days, let's say on an uppercase P, no, on a P shape, as in Peter. Let's say you have a normal trend day, and then towards the end of the day, you sell off and lose the value area low of a P shape. That's not necessarily only profit taking. That's somebody liquidating, right? That's somebody really selling a lot to those people that are willing to buy there, right, in that value area. So these days, I think it's important that you guys understand and the features, or if you want to call it characteristics of them. It's important to know, right? When you have an IB, where do you expect the trend day to go? Typically, you want it to be over the 2x, potentially leading to 3x. Normal variation does not go above the 2x, right? Normal days stay within the balance, right? You typically don't have extensions in normal days. So this will actually help you formulate and And for me, it's used as a calming technique, so I don't freak out too much when I see a big candle or a level that's being broken. I'll look at the, the days, the day types, and the ranges that they had. I would say in the past 7 days, that was a little bit tougher because of the volatility we had. But typically, they do quite a bit of work for your mental side of the trading and expecting the range or expecting what to happen at certain levels. This really, really helps. And in terms of confidence, this is how I would rank them personally, right? Neutral, normal variation, double distribution, trend days. Usually double distribution will go to a trend day, right? And then you have the trend day, which the conviction and confidence is huge. Okay. I think we covered this. Are you guys ready for the next set of tapes? If you haven't finished this, I'll
when we go through the, I think Rockets posted how to get them, how to use them,
which
how to
piece?
open them up, the tapes.
I'll ask him to repost it for you guys, and
Yeah.
I'll release the next set. And if you guys listen to it, it's really good if you guys take some notes, like structured notes. And if you want to share it, we can create a community for the notes bank. It might help you guys all. I
Yeah,
think the
haven't
third
finished.
tape is actually really, really good here on this class.
I put them on my phone, but I haven't finished all of them yet.
Yeah. Okay, guys, I think it's a little bit past 3, so we've been going for almost 3 hours here, or actually more than 3 hours, 3.5 hours.
You want to do the stock scan tonight?
I'll probably do the stock scan. So I can't even talk anymore. I just need water.
Yeah, understand.
And for newer people, did this class help you guys? Is there stuff that you're not familiar with that I can add to the class to make it easier for you guys to comprehend this?
Speak up, guys. You're paying for the class.
I think you've been doing a really good job of updating it. Even I joined in March. I really started actually studying in June because I got out of school, and you've made like continuous improvements to it. So.
And I do it based on the questions that you guys ask. Just so you know, if you guys don't ask questions, then I think I'm the almighty teacher and I don't change shit.
I think it's really good as well. Very informative, straightforward.
Okay.
I agree.
If you guys need something else added to it, simpler stuff, I started adding some of the questions that you guys ask for TPO and stuff. I'll add probably more administrative stuff to the back end of it. And then I'll upload this. But in the meantime, if you guys think of something, hey, you did this that day, or, I hear about something, there's more to TPO. There's TPO counts. I would say there's mechanical trades in the TPO world, but if it's not applicable, I don't want to give you that knowledge. Like there's setups within the other market profile traders use, but they don't occur as frequently, right? And some people traders, when they see that setup, they might just throw in quite a bit of size and take that one trade once a month and be done with it. And I know a trader that does that, right? That makes 200K on that trade and he's gone. Like you will not see him for a month, 2 months. So if you guys want me to add more details to it, that's not really, might not be beneficial to day traders, I can definitely do that. But there's some mechanical setups that you guys might find interesting, but you have to really stick with them. And you
Is this
have
like
to.
in relation to the springs and stuff?
Not necessarily in springs. There's different type of setups. Like for instance, we had a bullish extreme close. So there's traders, when you look at Friday's close, it's actually considered a bullish extreme. It's a day where if the open does not crack the close on 9:30, they would throw in a lot of cash and go long here. Right.
Like
So
they
you're
size
closing.
up on it.
Yeah. So that you're opening here. Let's say they open in between the value area high and the range. As you guys know, that's my least favorite open. But if they crack this, then it becomes my favorite, right? Because then I can target the value area low. 80% would be quick. But this is where, the bullish extreme setup is saying, if you open above and then you come back to this close and the POC being in this area and the major levels, it becomes a very good long. And that's called a 2-1 trade in market profile. They're looking for
And you
two
don't look
reward.
to, do you look to take that, not at the extreme size, but like,
Would I
Mm.
take this trade here tomorrow? Yeah, probably. But if we lose this, let's say, depends where we open. I can't tell you for certain.
yeah,
Let's say we open here and we go above and we fail all of these levels. Well, I would be short right here, and I would look to, see how do we respond here. If we get a response here that's pretty big and we crack out of this value area high, well, that would be good. But in terms of larger time frame picture, that's not good. Like what they did here would be a careful check for me. Especially, let's say this is A period and they build a B period starts here and this leaves access at this level, forget about it. I'm not looking for longs here. That would be the scenario that determines, like you asked, would I take a long? If this was massive A access with the B period established, no. I would not, just because I know how they got here and what kind of volume they
yeah.
had. Hopefully that makes sense. I know it's context based, but that's what trading is. If
No, it
this
makes a ton of
happens,
sense.
then this and that I do. I don't take this long. I mean, if they're, let's say they go somewhere, they open below here and they go here and then give me this, there's a chance I'll take that, right?
That made a lot of sense too after the class, like the A period and the B period setting the tone.
No, I mean, they're very big. I would say they're very, very important in terms of establishment, who's going to be in control for the day, whether it's short-term or long-term traders. I think it's important that you guys are aware of that.
Yeah,
Do
I
you
feel
have
like
it in
now
the
that I
notes, the C period emphasis and the L period in regards to if the L period creates a higher low and then the M period breaks that higher low? I think that would be good to add.
Yeah, I can definitely add that. I'll just
Because
take
the C
notes.
period confidence was something I didn't know about, which makes a lot of sense. And then the L period, that makes a higher low and M period cracks it, that could give indication, obviously, in regards to like all our other levels and bias and stuff,
Oh,
but
yeah.
give
No, that's good.
indication.
We'll definitely add that. We'll add this, but it usually leads to spike, so I think it would be good, beneficial for spike conversation.
Yeah, I learned that today too.
Yep.
I think it would be good to add.
Yeah, I'll add this with the visuals.
The
Okay.
mechanical stuff you were talking about earlier too sounds pretty good. Is that going to be more related to like swing trades?
Mechanicals can be intraday, but there's also a lot of setups for, I would say, for a longer time frame, right? I think
Gotcha.
you want to be aware of who you are first, and then I think it gives you a good opportunity, right?
Yes, sir.
Yep.
Thank you, Shorty.
Okay, guys.
Thanks,
We'll see you
Shorty.
thank you,
Have a good
Shorty.
tonight.
rest of the
Have
day.
a good day. Bye.
Oh, what time?
9 o'clock.